were the ones that started coining that term. The obviously it didn't go too well for them, but
No,
they didn't.
I think, look, crypto is such a new industry. It's not going to have, we've just seen the longest bull run in equities history. It took a long time for that to happen. And a lot of economic conditions had to come together all at once, low interest rates, all those things in an incredibly mature industry for us to have a long bull run in traditional finance. People are far too unsure about crypto. The market is far too illiquid. There's nowhere near enough people who know about crypto at this stage for us to have a sustained bull run for quite a long time. You need far more people to be confident in the industry for a bull run to sustain itself, because the minute panic slips in, people who look at the data for equity investing can go back 60, 80 years and basically know that if you hold for 5+ years, you have an incredibly good chance of making money. Can you hear me? I don't know if it's... Yeah, I can hear you. So is this my
Guys,
mic
is it me cutting out or Sam? Who's cutting out?
I can hear Sam.
Oh, yes. Oh, you can hear Sam, or is Sam cutting out for you, or is it just for me? Is Twitter glitching?
No,
Sam was fine.
Yeah, he was on a roll. You just
no worries.
Oh, sorry, bro. Yeah,
so
cut out for me. My bad. Continue.
I'm just saying, look, the reality is we have the data to give us confidence as equity investors. Honestly, as someone who, I don't do it anymore, but I managed a big client book in traditional finance for a long time, and I could look my clients in the eyes and say, look, this will end. This bad time will end because we know from data, and we know that we live in an inflationary environment, and ultimately the price of good companies is going to go up as long as there's inflation in the world, which I think there always will be, because the Fed, it's their job to ensure that we do have inflation. The issue with crypto is we don't have any data to give anyone any confidence. You can't look at a 10-year Bitcoin chart and be filled with confidence. That's the big issue that we have, is the industry is just so young, and I think we just have to accept the volatility of it, and accept that's going to be the way until we have more data and more longevity in the industry and more people investing.
But that's also what makes it an asymmetric bet, because if we were 200 years into Bitcoin's history, then we'd be gold at this stage, and it would just be a store of value rather than a speculative store of value. So that is what generates the asymmetric bet of Bitcoin.
I 100% agree, and the irony I've always said about Bitcoin is that once it fulfills its role, the people investing now won't be interested in it. People don't want it to be stable. People don't want it to be a currency. They want it to double or treble or hit $100,000 or $500,000.
Well, they're not now. That's why everyone got into crypto, right? Exactly, Bitcoin was too boring, so they wanted crypto, and then they wanted NFTs, and so it happens whatever the market is.
Very true.
All right, guys, just inviting everyone up before we kick it off. We've got a few in the panel already. What's up, Fidgetal? Ajit, been a long time, man. And Wizard of Soho.
Hey, things have been really good with me, Mario. Thanks.
That's good, man. That's good. I think everyone that says this in crypto is just lying. I'm not going to believe it. Things are not good with you, Ajit. Come on, tell us. Tell us the truth. Tell us the truth. The suffering you're going through.
I was born to suffer, regardless of the fact that what I suffer actually changes from day to day. Today I'm not suffering crypto because crypto prices seem to be doing well, but sometimes it's this and sometimes it's that. Just a few days ago we had a very bad incident of somebody phishing somebody's crypto account, and there was a kid who committed suicide, and there was a whole news story about it, and I was there trying to defend crypto, and which becomes very difficult in a sensitive time like this.
So what's the story? Hold on. Are they both related to what you just said now? The suicide by the kid and the wallet that was drained?
So it was not the wallet that was drained. It was somebody offering extraordinary returns on crypto investment through liquidity farming and mining. So it was basically the equivalent of a Ponzi scheme. And so this engineering college kid decided to put in a very small amount of money, and then got an extraordinary return in a day, and then put more money, then took leverage, then borrowed money, and then suddenly all the money went away, as is often the case in such scams. And he couldn't face the world, so he committed suicide. And while it is extremely tragic, of course it is, and the culprits should be brought to book, but the fact is that the news anchors were showing that this is the problem with crypto.
I think it's important for us not to ignore the. I know me and Simon. Simon, I've just sent you a co-host invite. You want to accept it? You're not as techie as I'd expect, Simon.
Yeah. Where do I accept it?
All right, let me do it again for you. Hold on, I've just cancelled it. So you gotta accept it so I have more room on the panel. I've just sent it again. Does it pop up for you?
Yeah, got it now.
All right, cool. I think it's important not to ignore. Like, I'm just gonna be honest. Like, we've had to kick off the discussion. So the discussion today, we'll kick it off in a few minutes. We got a panel that'll be joining and rotating the panel throughout the next, throughout the show. But the discussion today will be focused on the markets moving forward. I think it's a good time to the attention. Every time the market picks up, everyone's suddenly interested to know what's going on. So it's a good time to kind of do a quick space. It's like a last minute space. We didn't plan this one, just to cover the markets since we all have a bit of time, or at least I do. But I want to kick it off by saying, like, we've had an incredible year at IBC and my team and my company. So the portfolio obviously did well in the last couple of days, but it got hammered in the last few months, despite the business doing well. And while I'm really happy about what we've achieved, there's no denying the pain that comes with it. It's also been very painful. When FTX collapses and we're talking to our portfolio companies that are struggling, a lot of them are going through depression, whether they admit it or not. It's important to remind everyone that you're not alone going through the pain. And what you just referred to, Ajit, is not uncommon, especially if you guys speak. Probably Simon, you can touch on that a bit as well. But it's not uncommon. It happens throughout every bear market. But it's important to remember that bear markets have always been temporary, and they will continue being temporary. So as long as you get through it, it's. I'm not going to say it's worth the pain, but the pain won't last forever. So I think it's a good place to kick it off. The recovery we've seen now, no one knows if we've reached bottom or it's a dead cat bounce and we could see new lows. Nobody knows, but it's important to also remember that if we see new lows, it is temporary. So that's what I want to kick it off with. And we've got a pretty diverse panel. We've got people from the NFT space, we've got people from the more of a macro investors. Ajit run an exchange in the past. Jordan is the CEO of a public company. Tone is Bitcoin and death to the rest. So I think it'll be a good discussion. But Simon, maybe you can kick it off. Like, what's the latest on the Celsius, and very, very briefly, and then what's your thoughts on the markets today to kind of kick off the discussion while we wait for the rest of the panel to join?
Oh, screw Celsius. Can we have a session not talking about that?
Not talk about Celsius?
Yeah, let's talk about Bitcoin.
Tell us what's your thoughts on the market?
Okay, well, I'm not much of a short-term guy, more of a long-term guy. I released a video the other day on my YouTube channel about Bitcoin's major tests, and I think there's two final tests. I've always called Bitcoin a speculative store of value, and the crypto market is just a derivative of Bitcoin. And so whatever Bitcoin does, in Bitcoin good markets, it will, you've got a bunch of temporary speculation that outperforms it, or in Bitcoin bad markets, it crushes further. But the two final tests are, this would be the first time we've been through a non-quantitative easing cycle. So this is a new moment in Bitcoin's history. We were obviously created from Lehman Brothers and the financial crisis. The first 4-year cycle was just about proving that we could create something decentralized when Satoshi started mining 1 million Bitcoins, and we needed to prove that we could make that transition. The second cycle was making sure we could get through the law enforcement. So we had the China crackdown, we had US crackdown, we had the Japan crackdown after Mt. Gox, and then we had all the regulations that followed. The third one was about proving that hard forks and altcoins and whatever, didn't dilute the supply of Bitcoin, and it still had a fixed supply and it still had a role. And you couldn't just print and exercise money printing and dilute the value of Bitcoin. Now we're halfway through the fourth cycle, and the fourth cycle, you tend to get 1 year, historically, 1 year prior to Bitcoin halving, you enter into a bull market at some phase. So our next halving is 2024. We're in 2023, so at some stage you'd expect historically a new Bitcoin market. What's
But
different
can you?
about
But
this?
hold on. But can
Yeah.
you say historically when Bitcoin and crypto doesn't really have a history yet?
Well, there you go. So we've only had 3 cycles. So I described the 3 cycles we have. We're in the 4th one. So we're halfway through the 4th cycle, which is what gives it this asymmetric opportunity. Because if we had all the history of the S&P, you can just pull a chart of the S&P and see the S&P has recovered from every single crash it's ever experienced. There's only one stock market that hasn't, and that's the Japanese stock market. But the S&P, you know it's going to recover for as long as they continue the cycles. So yeah, we can't say that, and that's why the returns have been so high. So the first cycle produced 1.6 million% returns. The second cycle produced about 7,000% returns, and the third cycle it keeps going down because it becomes more and more certain as we progress. So we're halfway through the 4th cycle. And you always have a regulatory crackdown in every single cycle, which is always preceded by rampant speculation and criminality, fraud. And so you can say that we've seen all the criminality and fraud. There's a few more things to come out. We may have a few more black swan events.
Can you tell us about more those a bit more? So I was talking to someone yesterday. I'm meeting them again tomorrow. Big player in the space, and they said, yeah, since I'm not saying who they are, I can say what they said. They said that they think DCG and Gemini are both in serious trouble, and Gemini will need the Winklevoss twins to bail it out. I haven't been really keeping track. I haven't looked at the numbers. So I'm not sure if there's anything new recently since the open letter. But he said that the Winklevoss twins will need to bail out Gemini, and they probably won't. If they've got any if they make a logical decision and ignore their pride. So they're pretty bearish on Gemini. Are you in the similar position, Simon? Because we've called DCG really early. We got attacked for it in the early days, and you were pretty vocal about it as well. Alex, who's co-hosting, was pretty vocal about it. Would you have similar concerns now towards Gemini, or you think they're well capitalized?
No, I mean they're not well capitalized. They're insolvent, and so they have to either go to Chapter 11 or they,
Hold on, just to be clear. Sorry, Simon, I'm talking about Gemini, not Genesis.
Gemini. Sorry, Genesis is insolvent, and obviously they're dependent upon Gemini. Genesis. I can always get those two are quite tricky, aren't they?
So when you said Gemini is insolvent, you're referring to Genesis, yeah?
Yeah, Genesis is insolvent, and
I just saved us a lot of attacks. So your thoughts? I just saved your ass. You owe me one. But what's your thoughts on Gemini?
Well, so I mean, Gemini is 100% dependent upon what happens with Genesis, and we've seen for what happens when you don't file for Chapter 11 protection. The SEC comes after you and says you're offering illegal securities to retail investors. And so, those services do not return. There is no returning for those services. That's done and dusted. It's gone. Now we just need to.
But Gemini is also an exchange. I mean, I believe that they are a legitimate exchange, unlike FTX. So their core business should not be affected. Agreed?
Absolutely. I mean, if they fully segregated funds, which I fully expect they have with the oversight that they've had, they don't get So here's the issue. The issue is Genesis did not register their earn program as a security, and when you don't register it as a security, no one knows what you're doing with the money. And so Digital Currency Group was able to prop up the price of GBTC, borrow in order to make borrow short in order to invest long, and buy private equity. And also, use promissory notes in order to put an asset as a current asset and do borderline fraudulent accounting.
So we're talking just for anyone listening. So I want to we have to remember, Simon, like we're different to what we were a few months ago, where we had just a very smaller, purely crypto audience. We do have a mix now where we've got people that understand crypto, they know who DCG is, etc. And we got people that just know Bitcoin and ETH and they want to understand it. So what we're talking about here, to keep it simple, what Simon's talking about before giving him the mic is, DCG is one of the big, probably biggest 3-5 companies in the space, run by Barry Silbert. DCG owns Genesis, and Genesis got into trouble. It's a lending platform. And then, now there's concerns around DCG, which also owns the Grayscale. The Grayscale Trust. So this is just a general overview,
even that there's a bunch of complexities that a newbie would find hard to understand.
Yeah. So, but generally speaking,
really
we have a lot of concerns around. There's an investigation that by the way, Simon, we called the SEC investigation in our space with Andrew before, and then like 2 days later it was announced. You remember that?
Yeah. Well, any earn program is an unregistered security if they didn't have it registered. Now, the one that's slightly different with Gemini is Gemini actually have a trust bank charter, and in theory, banks are able to offer securities without registering as a broker dealer. In theory, but it doesn't mean you circumvent securities laws and you don't disclose how funds are invested. Now, Gemini, there's no way that they could disclose to investors how Genesis, and they built the service on top of Genesis. Now, Genesis, when you don't register it as a security, you don't have, if you don't have any disclosure requirements, you can just use those funds in a, like a black box hedge fund, they call it, where you just put your money in, you entrust the fund manager to make the investment decisions. But the way that regulators protect from such scenarios is they say, well, the only people that are able to invest in such a product are those that are sufficiently rich, whereby they can afford the losses. And so you have that. I've lost
I don't hear you, Mario.
Yeah, you turned into a robot, Mary. Am I the only one?
I hear you fine, Simon.
All right.
We finally know how Mario manages to do 32 hours of spaces a day.
Testing. Can you hear me now?
Yeah, we got
Can
you
you
now.
hear me now?
Got you.
All right, cool. Yeah. So I want to go quickly jump to Tone. I don't know if I interrupted you, Simon.
Yeah, go on.
Kind of glitched for me.
Let me finish off that bit and then Tone.
Oh, okay. So all right. Yeah, go ahead.
I wasn't going into Genesis, but you took me on a tangent, Mary, and I fell for it. I can't help it. But yeah, so that we're halfway through what I call the fourth cycle, and the fourth cycle is an uncharted territory, and in each cycle you have a new uncharted territory, and this uncharted territory is quantitative tightening. So the traditional macro world has been pumping dollars into the economy. This is the first time when they're not pumping dollars into the economy, and we don't know how Bitcoin reacts when you don't have a stock, a bull market and a quantitative easing cycle. And so that's what I'm looking out for. That's like the test. And then obviously once we get through the next halving in 2024, I consider it the final test. And the final test is what Bitcoin does in the central bank digital currency world, which is what I would call the 2024-2028 halving cycle. Those are the two final tests. And then I think Bitcoin transitions to more of a boring asset class that could be considered a store of value as close as we could get there. But we don't have 5,000 years of history, so you'd expect more of the isometric bet.
So I'll jump to Tone. I wanted to ask you the same question as Simon. I think you'd agree with most of what Simon says, but maybe you can kick it off with your thoughts on Bitcoin, general market overview, because you've done this over the last few months in our spaces in the early days, and then your thoughts on Gemini and DCG. Because I think for anyone listening that you don't know Gemini and DCG, just imagine Bear Stearns and Lehman Brothers, or Lehman Brothers and Morgan Stanley, or whatever, back in 2008. That's how important they are to the crypto space. But Tone, thoughts on the market first, and then thoughts on the big two.
You know what? Let me go the other way, because it's a lot easier going the other way.
Okay, do that, and then add Binance to the mix. Let's spice it up a bit.
Yeah. So let's start with what do you call it? Genesis is completely unimportant. It actually is completely irrelevant, and it doesn't matter. A bunch of idiots are going to lose their money, and it's fine. I don't see any systemic risk there. The only thing that really matters in the entire DC digital currency group's portfolio that is controlled by Barry Silbert is GBTC. That is literally the only thing that matters. And the sooner his other dumb businesses implode, the sooner there could be a new custodian in control of GBTC and the trust. Hopefully, it will be Valkyrie, and if we're lucky, and then everything will be better. Now, a Gemini, also, they'll get in trouble with the SEC for doing something stupid and offering the lend products to their customers. Again, stupidity for themselves that they offered that, and they'll get a fine. A bunch of dumb people will lose their money, and as long as their business is segregated and their actual core business of the exchange, they didn't do anything stupid like FTX, that will be fine as well. Binance is a whole other issue. Personally, I always felt that Binance was a lot shadier than FTX. I was wrong. FTX turned out to be a lot more shadier than Binance, but that doesn't mean that Binance isn't shady. So I am still concerned that Binance would completely implode. Whether that's going to be, wait, I'm getting some feedback. Whether that's going to be caused by regulators going after them and taking them down, or whether that's going to be, self-inflicted, basically. But if the bull market has started, then Binance will hang around for a little bit. Mario, I'm like hearing myself. I think you might need to mute.
Yeah, I'm muted. I think I forgot to mute. Yeah. So by the way, did you guys hear? Did someone else, like Alex? Did you hear feedback as well when I was unmuted? Just curious. Alex, or someone? Simon, did you hear feedback when I was unmuted?
Yeah, there was.
No, it was good for me.
All right, let's continue, Tone. I don't know, it's cutting out. All right, cool. It's good. Yeah, Tone, I think it's all good. Yeah, Tone. So in terms of Binance, when you refer to Binance, I just got to add question as you go through this, and we'll go to Wendy. Alex, your connection is shit, by the way. Then we go to Wendy. But another question to add to the mix. And when you say Binance is going to implode, that's a pretty big statement. Two things I want to say. Number one, are you referring to the? I want to split Binance into two Binances. The old Binance.
I didn't say that it will. I said that if it does.
Do you think it could if we continue in a bear market and this is a dead cat bounce? Because a lot of the survival of a lot of the companies will depend on the market and what happens in the market over the next 2 years.
I have never in my life had a single penny in Binance, and I plan to keep it that way. I do not trust that company at all. So yes, I believe there is a high probability that Binance is going to one day implode. But that's my personal view. I have absolutely no knowledge of any internal operations. Let's just be clear. It was an exchange I always stayed away from, and it's the one. It's the big exchange that I trust the least. Now, I'll also say that I trusted it less than I trusted FTX, even though I've never had a penny over there as well. I found that I find they're both equal to me. They were both they're both the same company. It's impossible to say which one is running the shadier books. I would have assumed it was Binance, but turns out it was FTX. But I equally don't like.
What do you mean, Tom? What do you mean they're both the same company? You mean you have the same concerns with both? Because they're not this. You can't say they're the same company.
They're the same company because they are run by the people with the same mentality. They are run by people that basically they think the same, right? It's the same groupthink. Why did Bear Stearns collapse within months of Lehman Brothers? Because the mentality of the people running those companies was identical. Okay, so the mentality of the people behind those companies is absolutely identical. So there's absolutely it was a coin flip. Which one was running a bigger, I guess, Ponzi, right? Like both the exchanges, they started with the same mentality because the exchange depends on their token, and that is a flawed business model that will eventually, I believe, take them down, either from a regulatory perspective or from an economic perspective and a fundamental perspective. That's a whole different discussion. I think before I hand the floor, you probably want to hear my views on the price of Bitcoin, which is not related to that. But the reason I mentioned Binance is that I don't think anything in in Genesis or will affect the price of Bitcoin. But if Binance implodes, that will affect the price of Bitcoin in a similar way that FTX affected the price of Bitcoin, where Bitcoin crashed like 30% almost in a single day. So I can see that happening, and even probably a 50% crash in Bitcoin if Binance implodes the way FTX did. And to me, that is a greater than a trivial probability. Now, Binance imploding aside, I think this is the start of a new bull market. Now, have I ruled out newer lows completely? No, because there's one major hurdle that Bitcoin has to pass, and that is the $25,000 zone. So there's two things that I need in order for me to say the bear market is over and the bull market has started. And usually it has a 90-95% success rate. And those two things are establishing a higher swing high and then establishing a higher swing low. Our swing low was a consolidation low around 16,000. Our prior swing high, we can say that there was a minor swing high around 20, but the real prior swing high was around 25, which was the price pretty much right before FTX imploded. So for me, we would need to establish a visible swing high, which means not higher by $1 or two, but higher by at least, $2,000-$3,000, and spending the time at that $2,000 to $3,000 higher for at least 3 to 5 days, maybe a week. That establishes a higher swing high. After that, a pullback should not take us down lower than, say, $20,000. That establishes a higher swing low. Once we bounce off that 20,000 and start approaching that $25,000 zone, I would have a 95 to 98% confidence that the low is in. Now, I can talk about how this acted historically. Like, for example, when we crashed down to 3,000 back in late 2018, we then moved from 3,000 all the way to 14,000 very, very quickly in a matter of months without ever establishing a real pullback, a pullback of 20 to 25%. Never established that. And that 14,000 remained the top for a while until COVID took us down back to 4K. So it's really important to establish a clean swing high that isn't exponential. And we are running into this exponential move right now. I believe this brief, big move up. Now there is a news circulating that someone bought $5 billion worth of Bitcoin. This is likely to be an institution or a major company. We're going to probably find out around the next quarterly earnings of major tech companies. So that could be a single move in that. And I am expecting a pullback. Do I think we short-term topped? I have no idea. The answer is maybe. I am looking for a 20 to 25% pullback. And the further we go up, the higher my percentage would be. Right now, I'm looking for like a 20% pullback, something like that from the move, right? Not 20% down, but like 20% from the move. So down to like maybe back to 18. But if we continue going up to 25 and we reverse from 25, then I'm only going to be looking for a pullback to 20 or 21. So it really depends how much further we go. And right now is the weekend, so you really can't judge. We'll need one more full week along with the stock market to see what's going on. So I will leave it there.
Hey, Tone, can I ask a question?
Of course.
I remember back in the day, I seem to remember being on a panel with you, and you talked about the day the market's getting back to normality is when we enter into the next Bitcoin bull market and all the alts go down, but Bitcoin goes up. Do you think we're ever going to enter into that market, or do you think everything's just going to go up again with it?
As much as I hate seeing Bitcoin price go down, I was mentally ready for another 6 months of Bitcoin downside as low as 10 or 11,000, as long as the consolation prize would be the complete destruction of some of these shit coins. So unfortunately, that didn't happen. Sort of like I'm half unhappy about that, but I'm always happy when Bitcoin price goes up. So it does look like a lot of these alts will pump. But here's the thing: these alts will never break their 3-year-old high versus Bitcoin, right? So, for example, if you look at all of these shit coins, from Cardano to Solana to like anything that pumped huge in the last bull run versus Bitcoin, I do not expect any of them to breach their all-time highs versus Bitcoin. Now the new shit will do it, right? Like the stuff that wasn't popular enough back then, or they were just launching around that time. Because the one thing about all of these altcoins is that there's always a better one coming, right? Like every year there's a better one, right? Like they're all competing with each other. They're not competing with Bitcoin. So like Solana is old news, Cardano is about to become old news, right? And there's a bunch of new ones. So those new ones will lead the majority of the pump versus Bitcoin. Now versus fiat, they might make new all-time highs, but not versus Bitcoin.
Let me jump because I see a lot of hands up. So, Ton, I'm just going to jump to Wendy. Wendy, it's been a while. Where do you stand? Do you see a similar? So, Ton did mention a few things. He said that there could be the beginning of a new bull run, but obviously you can't rule out new lows, especially with all the externalities all the black swan events that could be possible. Is expecting a pullback after the recent pump from the $5 billion investment that came in from obviously institutions. Which is obviously expected. What's your stance, Wendy? It's been a while. We haven't had you on the panel.
Thanks for inviting me back on. Also, you guys, make sure you stick around and listen to what Digital has to say about NFTs. NFTs have done phenomenal in this industry. And I think one of the reasons why Bitcoin actually was propped up and hit approximately $69,000 is because of NFTs. If we did not have NFTs, we wouldn't have this. They solve a lot of problems. And I know that we haven't seen a whole lot of problems being solved yet. We will see that in the next 5 to 10 years with them, because we all know how they can help the music industry, and y'all know how I love a music man. But anyways, let's talk about what's going on with Bitcoin. And Tone gave a really, really great explanation of what he's seeing. Even though I don't agree with Tone, everything he says when it comes to Bitcoin or price action, he's still an outstanding, phenomenal trader, a good friend of mine. But one of the things, there's a lot of different factors. So I don't want to come up here and say this is going to happen or this is going to happen. Some of the things I want to talk about that I'm paying attention to, that I'm focusing on. First off, America's in a big crisis. America's been in a big crisis long time with our economy, our spending, our debt, all of those things. But we had COVID. We had that big factor that happened. Inflation is absolutely out of control right now. So that's something I think that everybody should pay attention to. From my interpretation of the Bitcoin white paper, the Bitcoin's true intended purpose was essentially to be, hard money. It was to be that solution for the third-party oppressive entities. And we're kind of seeing that change happen now. I personally don't think that Bitcoin infrastructure is built out enough to where people are going to be, where everybody's going to be able to adopt it. It's going to be the end all be all. It's going to be the savior, because self-sovereignty is hard. We've also been bred as an entire country to be dumbed down. And we're not we're so used to relying on third parties and other people to do things for us. So there's that factor that comes into it. I'm also looking at the 4-year cycle, and I'm sure that Tone can kind of talk about that and how mining economics play into that. I believe we have about a year and a half left before the next Bitcoin halving. I'm a firm believer that we haven't seen the bottom. If you take a look at the 2017 pump and you take a look at the previous market or the previous cycles, Bitcoin has always operated in a 4-year cycle. And I know, I'm a firm believer in we should pay attention to former cycles. We shouldn't talk in absolutes, but we should pay attention to them. And I do think that we will continue to follow the 4-year cycle. And once and if it does get broken, then we will be able to kind of look back and then say, okay, well, that's what happened. It was broken. But at the same time, most people, most traders, most analysts do not know we're in a bull or a bear market until actually we're in it after the fact. It's very, very rare. If somebody's like, oh, well, I knew it was going to happen on date XYZ, they're probably full of shit. Because, we kind of, as traders, we kind of just trade with what we're seeing, with the structures and what we're seeing. I personally think that this is a fake out. I think that it's, we're seeing a really, really nice relief pump because the FTX news has kind of died down. But then again, at the same time, like we have the DCG, the Genesis, the Gemini, all that stuff happening. And even if Grayscale and Genesis and Digital Currency Group, if they go away and some of thand things happen, it's kind of an unprecedented thing for our industry to see so many different collapses. Like, it's a brand new thing. Yes, I do know that Bitcoin is still like Bitcoin and crypto are still newer, etc. But at the same time, like those are going to be really, really massive for the industry. Like we're going to take a big hit with that. And then especially when regulations come. So I don't think that the Bitcoin bottom is in. I think that we will see that 10,000, approximately that $10,000 area, the 85% correction. I'm not trading in absolutes though. Like I like to use, I've got a trading and investing plan that I stick with, and I always have a bullish and bearish scenario. And that's kind of what I'm looking to happen. If it doesn't happen, if I don't get that hit, if we maybe get down to 14,000 or maybe 12,000 or whatever it is, that's fine too, because I'm not somebody that's just going to wait till we get to 10,000 and use, all my capital to buy that dip. I'm going to set limit orders and I'm going to hedge my risk that way. Another thing that I wanted to touch on with that Tone said about all the shit coins, I agree with him to an extent. Like I'm a 100% a shit coiner. I love them, and I will always love them. And the reason why I love them is they breed positive. They give positive competition to the market. If you live in a society that just has one bread maker or one pizza maker or one, blacksmith, whatnot, you're gonna stay stagnant. Positive competition really pushes the market forward. And I don't think Bitcoin would be anywhere it's at today if it wasn't for altcoins, if it wasn't for shitcoins, because there's a lot of really great technologies that are being built. Are most of these businesses going to fail? Or most of these cryptocurrencies going to fail? Probably, because entrepreneurship is hard. Most people can't get their shit together, especially when we're talking about folks in crypto. We have so many intelligent, diverse, great people in this industry. And there's stuff that happens, and most entrepreneurs fail. So that being said, without the technology of altcoins and whatnot, I don't think Bitcoin would be where it's at today. We wouldn't have the Lightning Network. We wouldn't have the layer solutions. We wouldn't have the adoption that we have today. Altcoins really helped with that. But at the same time, Bitcoin's purpose is a lot different than altcoins. Bitcoin is supposed to be that hard money. It's supposed to be that hedge. It's supposed to be that tool that we have to essentially fight against the oppressor, fight against the third party. And altcoins are just solutions for other things that we have going on, especially in tech. Will most of these altcoins go away? 100%. Are there bad actors in the space? 100%. But at the same time, we always need to kind of go back to the Bitcoin white paper and remember what being self-sovereign means. When I hear the term self-sovereign, it doesn't just mean, custodying my Bitcoin and custodying my crypto properly, but it also means taking accountability for your actions and figuring out what you're doing. I don't know any person, like even people I know that do their 401ks or the IRAs, or, when you have a 9 to 5 and you put $100 every week in there, you still have an entry or exit. You know that every week you're going to be sending $100 to a third party. They're going to take that $100 and they're going to invest for you. And you plan to cash that 401k out when you're 65 or 75 or whatever that is. And we should still use that type of ideology when it comes to crypto or Bitcoin. You're somebody that wants a dollar cost average on coin 123 for the next 20 years of your life. That's fantastic. Good for you. Do I think it's stupid? Yes. But at the same time, I'm not here to tell you what to do, because I like to operate in an open economy and let people do what they want to do. But at the same time, you need to have an entry and exit. So if you're somebody that's aping into altcoins right now and you're thinking, okay, I'm going to, buy the dip here, because these things are going to keep going parabolic, you're going to get wrecked, especially with Bitcoin too. Like right now, I do think that it is going to go down, and you should have some sort of plan or strategy. Like, when are you going to take profit? Who the hell holds an asset for 50 years with no intention of cashing it out? Nobody does. Everybody's going to cash out their 401ks and their IRAs. So with that being said, I don't think this is the start of a bull market. We're seeing a little bit of a mini run. People are euphoric because we've had so much terrible bullshit happen in this industry. So people are excited and then they're not playing it properly. And if you're somebody who's actively taking profit and making moonbags, congratulations. If you didn't sell the top, you're probably not going to sell the top. And it's good that you're actually practicing risk management instead of just holding on to your bags and hoping these things are going to go to the moon. Because in reality, a lot of this stuff is exit pumps. And if you moonbag it, that basically means you remove your initial investment and you remove some profit. You own these assets free and clear, and you have no risk. So if you want to, if you want to hold this thing for 50 years or whatever the hell you want to do, that's fine. So that being said, I think this is a fake out. I think that we could run all the way up to approximately $36,000, fill those gaps. That could be that melt up theory that plays out, and then dump it all the way down and fill that gap back down to around $10,000. But with that being said too, I'm not going to be trading or investing in absolutes. I'm taking my time with this market and doing things on my term. So thank you for having me up here.
Yeah, I want to. You mentioned NFTs at the beginning, and I took a note to kind of link back to that. I think it's a great overview, your overview, Tone's overview. But touching on NFTs is interesting. I'll go to Fidgetal actually. Let's do a quick NFT overview. And Richie was here. I don't know if he dropped off. No, he's in the audience. I'll try to bring him back up. But Fidgetal, if you can give us a quick overview on the NFT market today, because surprisingly, I didn't expect it. I thought after FTX, risk assets within crypto will probably get hit the most. Yet we've seen NFTs do pretty damn well. So maybe you can kick it off with a general overview on the NFT market, especially Solana NFTs, man. Not sure if you're keeping up, but I'm fucking impressed.
Yeah, I mean, I'll actually tether the two because I think most of these conversations, and thank you, Wendy, thank you, Mario. I think a lot of these conversations just get mired up in DeFi, and we just
Sorry, just
spin
one
in
Fidjo
circles.
before you continue. Sorry, Fidjo, just forgot to mention for the audience. I want you to do me a favor. Bottom right corner in the comments section, I need you to give me an idea of what your stance on the market is, what questions you want answered, and also what projects you're looking at. If I get one or two projects that I mentioned a lot more than others, we'll probably get the panelists to kind of touch on them as well. So in the bottom right corner in the comments, I'll be going through the comments as Fidjo gives us an overview on the NFT market. Go ahead, man.
Yeah, I was going to say I think there's a lot of correlations actually that aren't being drawn, and I'm kind of sick and tired of just hearing DeFi conversations and just hearing previous speculation conversations because they don't boil in the technology and infrastructure. There's not a lot of technology and infrastructure from the crypto side. From the NFT side, there is a ton of infrastructure and SDKs and business being built into the ecosystem that I think will create a divergence between what is the predictability of, or the semi-predictability of the halvings and the market trends of major coins versus altcoins in general. And that's where I think NFTs come in. With regards to crypto, I just want to say, I think this will largely depend on a couple quick pieces. I think they'll rally around tech stocks, depending how tech stocks perform. It'll also have to do with CPIs and how the recession gets baked in. From the outset, I think we're looking at a pump till the end of February, beginning of March, just my opinion, and then a retracing in general. As for the entire 2023, I think it has to do with how legislation gets implemented, how the recession actually impacts, and what happens with quantitative governmental decisions. With regards to NFTs, I think I want to make an important distinction here. Everybody looks at NFTs, and yes, Mario, they're pumping. Solana NFTs are pumping because Solana token is pumping, and Solana is a much more degen, flipping, high risk, high reward infrastructure. Ethereum is a more kind of solvent, stoic investing strategy, which kind of funnels towards the large projects, which is what you're seeing with mostly Yuga or the large blue chips. They are pumping heavily right now. But what I want people to pay attention to, and this is where I'm mostly interested in, is that NFTs aren't JPEGs. They are right now. NFTs are the implementation of smart contracts, which is the basis for infrastructure of actual blockchain and actual crypto usage in the future. So what we're seeing now, and what Simon's great at, and Alex and Tone, and will govern what happens with Bitcoin for the most part, because it's not an infrastructure layer, although the first smart contracts were built on blockchain with the Omni Foundation and the Omni layers. What we're going to be seeing, what I'm excited for, and what I think will be the boon for crypto in general across the board, is real business, real infrastructure. We're seeing adoption of NFTs, and for those who don't know, the difference between an NFT and quote unquote crypto is simply the functionality. They're just tokens on top of a blockchain layer. So separate the idea that NFTs are just pictures. What they allow is for automation in business. What they allow is for adoption for large companies to have immutable and trustless infrastructures. We are seeing that happen. LVMH has built their own blockchain for years. It wasn't sustainable. But what I think will happen is we'll start to see a divergence between speculation, which is what our panel usually is talking about, and looking through markets and financial trends, the blends between traditional money markets and how Robinhoods and those make crypto less of a hedge and more of a hand in hand with traditional money markets. And what I'm excited for, and I think where the biggest money is, and if you're speaking to, if you're really speaking to sophisticated VCs who are looking to make real money that exceed traditional Silicon Valley, they are looking at Web3, and they're looking at the way that crypto, or should I say blockchain, NFTs, smart contracts, can really move industries forward, cut out huge swaths of unnecessary human labor, implement AI. And for me, I think that's going to have a huge effect on the price of Ethereum, diverging from its normal trends of patterning along and following Bitcoin. And I think we're going to see functionality as kind of the meta in 2023 that separates everybody's ability to speculate and money markets and really make investments into sound crypto while not treating them as crypto, but as the functional backbone that the blockchain supports, if that makes sense.
Awesome. I think Mario's fixing his connection, but Richie, I know you're deep in the NFT space, and I think Digital gave a lot of really great points there. Is there anything you want to layer on?
Yeah, I was just going to kind of reiterate essentially what he was saying, because I think that's the fundamental disconnect right now, is everybody just associates it with monkey JPEGs and things of that nature. And, you know, that shift is what we're seeing now, especially with all of us that do have our PFPs. They're now growing into IP usage conversations and driving that narrative forward. I think we're out of the, you know, late 2021, early 2022 DGen era to where now it's going to become blockchain implementations that have real actual value and use cases. And, you know, at the end of the day, that DGen era is what brought the attention to the technology. And now we're able to leverage what's been created and actually drive it forward in a, you know, more tailored sense to actual proper business, as opposed to just, you know, people flipping cute pictures.
Hey, Mario, if you can hear us, the last time I was on here debating all the NFT stupidity was like 6 months ago. So feel free to step that up once again.
But Tone, what we've seen, look, we're in it. Can you hear me fine first? I've just tried changing my headset. Yeah. So Tone, question for you, man, is look, fair argument, and I think there was a lot of hype, especially around PFPs, and I've been bullish long term, but more bearish short term. But we've actually seen them hold value. We've seen FTX collapse. We saw the FUD around DCG. We saw Luna. We saw 3 Hours Capital. We saw liquidity disappear. Yet we saw a lot of these blue chips, I'm talking about NFT blue chips, or the NFT ecosystem considers as blue chip, hold their value. And even when, you know, when Solana dropped in value, we saw some of the Solana project go up in terms of Solana denomination. So, like, we can always make that argument, and it's a good argument to have, but you know, the facts are the facts, and they've done well in a shitty market. You have to give credit when it's due, man. Tone?
Are you talking?
Yeah, bro. Yeah, I'm taking a jab at you.
Oh, okay. I wasn't sure. Look, you can trade whatever you want. Like, I'm not here to tell you shouldn't trade Solana and make yourself wealthier. I'm just trying to explain the stupidity of what people think are NFTs. Like, I love NFTs. Every time I get on an airplane, my digital NFT of my boarding pass is amazing, right? It saves me the time from walking up to the counter and getting a paper ticket. But this technology has been with us forever. And sticking it on top of a centralized database like a Solana or Ethereum is not actually revolutionary, but one day it'll be on top of an actual decentralized platform, which is Bitcoin. And then there could be some use cases to it.
So Tone, so would you say a PFP on Bitcoin is an interesting concept where a community is built around it and IP is built around it, a storyline, partnerships, products, list goes on. If it's built on Bitcoin, then it makes sense, correct? Even PFPs.
Sense.
Okay. How about utility? How about utility?
Utility doesn't really matter, right? Because your utility of your NFT, it's very, very rare that decentralization actually matters. It's in very rare cases. So yeah, if decentralization matters, then again, you need to use Bitcoin for the decentralized technological layer that actually gives you ownership. But that's the technological side of it. The whole other side is the speculative side, right? So is your NFT valuable because it's an NFT, or is your NFT pumping the price of the token that is the underlying base of your NFT? Why does your underlying base of your NFT need a token? That's the first question you need to answer. And if your NFT is actually valuable because it's so rare, again, why is your NFT valuable when it takes minimal effort to create an NFT? It costs nothing to create an NFT.
Okay, Tone, how long does it take to create a Bitcoin and replicate Bitcoin? Does that mean it's another Bitcoin?
You can't replicate Bitcoin. That's the decentralized nature of
you
its
can
creation.
replicate the technology, but without adoption, it's useless.
Well, without adoption, it's useless, and you can't replicate a decentralized creation. Like you can't. Like when CZ comes out and says, "Us, Binance, we are building the next decentralized platform," he's lying. Like you can't like build a decentralized platform. It either happens naturally or it doesn't.
What does it have to do
Yeah.
with virility, digital identity, community, and the value of humanity that differs from crypto? That's what people don't understand. The difference between crypto and NFTs is that crypto is objective. Crypto is blank. It is simply speculative. It's simply financial. What NFTs introduce is the value of humanity, which money does not mean anything without humans. The connectivity, the building, the relationship, the value building, the businesses
You're being
separates
too,
crypto
bro.
from
You're just being,
NFTs.
you're being too more.
That is a word salad that makes no sense whatsoever.
Well, I can
Yeah,
make it less
Fidgetal.
meta.
Yeah, go ahead, Alex.
Is
Fidgetal, you just got too emotional on this one, Fidgetal. We're friends,
well,
but like I didn't. That's shitty response, Fidgetal. You were trying to back me up, and you kind of dug a hole for me. Alex, back me up, bro.
well, yeah. I think it unlocks a lot of things Digital said, but I think the underlying value, getting back to the point that Tone had, is that NFTs really allow for composability across what would otherwise be siloed off databases. Like the problem is, if you have an American Airlines digital like NFT, as you call it, that's unique to you, the problem is that that only has value within the system and the platform that American Airlines owns, right? And the promise of NFTs is it actually allows you to take these unique digital assets and suddenly build it across open databases, right? Where it actually can basically go across the entirety of the open internet to have value. So that, in my opinion, is the largest unlock for NFTs. And, whether it's on an open database like Bitcoin or an alternative L1, I think, that's a different discussion. But to me, the composability piece is a key aspect of NFTs that speaks directly to that American Airlines ticket you just spoke to.
Let me ask a question. Would you all be as passionate about NFTs if they didn't have a price?
Yeah, look at this. I'll answer this one. Audience members, I want you to comment if you're in the NFT community, what your thoughts about NFTs, and people that hate NFTs comment as well. That alone should answer it, Simon, because we're like these guys have just been annihilated. They've lost in so they got the NFTs. They went down in value in NFT terms, like in denomination of whatever crypto, Sol and ETH and Matic, and they've gone down, and the actual crypto itself that they're denominated in went down. So they got annihilated. A lot of them are new in crypto. They weren't there in 2018. A lot of these guys are new in the space. And I was surprised to see they stand their ground. And if you go through, I was going through the comments earlier, the NFT community is dominating the comments, yet we do our crypto shows. If you know, Simon, our crypto shows are bigger than the NFT shows when we used to do both a few months ago. So I think that alone for me is enough of a sign. Like community alone is enough of an indicator.
But the community is interested in the recovery, right? So this is the whole XRP argument. Yeah, nobody apart from a bank gave a shit about banking technology, but all of a sudden the XRP community are passionate about technology that can support the banking system. The only thing they care about is the price going up, and so
That's way different.
But that's you can say this, but Simon, you can say this about any crypto.
Yeah.
Like I'd like.
I understand, but what I'm saying is it price or is it? So I put out a comment today and I said, look, I think if most people were honest in crypto, replace Bitcoin, because I know the whole Bitcoin maxi thing, has its connotation. But most people in crypto, they are either thinking about how to be involved in a crypto so that they can end up with some more Bitcoin. If they're not, they may be in Ethereum maxi. That's a thing, I guess. And people are happy to store their value in ETH. Or they're just doing it because they want to make more dollars. But everyone has a base currency that they're trying to accumulate in the end. And my theory is, and maybe I'm wrong, but altcoins and crypto and NFTs is all about trying to end up with either some more dollars in the end, some more ETH in the end, or some more Bitcoin in the end. And just like when you're acquiring a stock or a share or anything like that. And then
I think
we
it's a really
say it's
interesting
technology.
Sorry,
But to me, Bitcoin, the thing. Go on, go.
Real quick, right? So Simon, there was two parts to it, right? You talked about the value, right? But you got to break it down. There is value in the NFT itself going up, like in the case of the monkey pictures. But then there's also value in the underlying token of the database that is hosting these NFTs, right? And that is the big battle. So if you are the right influencer and you can convince people to buy these NFTs or use NFTs that don't even have value to them, as long as you're holding the underlying token of the Solana or the Ethereum or whatever new comes along tomorrow, as long as you have that token, you still benefit financially. So there's two aspects to it.
Sam, Sam, give me your thoughts. Go ahead, Sam.
Yeah, well, it's interesting. I think we're trying to compare something with subjective value to trying to understand where fundamental value can come into crypto. So look, NFTs as they stand are based on subjective value. I believe that NFTs in the future have immense utility that will, and I'm not talking about profile pics, etc. I'm talking about ticketing, which would have immense utility for big organizers of events where they can add security levels, they can add perks, they can do all sorts of incredible things with NFT technology that they can't do with the current QR technology that you would have for, say, an airline ticket. So we're looking at subjective value right now, which is what NFTs are today. They're purely subjective. But I fully believe that NFT technology will have fundamental value. But it's exactly the same with crypto. There are thousands of tokens out there that have purely subjective value. And then there are tokens out there that, I believe I'm investing in because they have fundamental value. I'll push back slightly with Tone here. Like the reason that I support BNB, there's two sides to it. Firstly, it has fundamental value because it generates revenue from multiple sources, and also there's a demand on BNB through the use of an enormous ecosystem. There's sort of 1,200 odd projects on the BNB chain. Every time there's a trade.
By the way, just quickly, Sam, we just breaking news. We just broke 21K at Bitcoin. I was just checking the price. I don't usually do that, so we broke it again. So what do you mean cool?
Yeah, so,
fuck yeah, Sam. Well, come on, man.
It's all good,
cool.
I don't get excited about price, man. I've been trading for 20 years with zero emotions. But
We're talking, bro. Sam, you know me. I love you. I'm just interrupting because Frank is in the house, and I actually was talking to my team about Frank and his project. Moving from Solana and ecosystem and Polygon, so we'll actually bring him up on stage to give us his thoughts on the NFT ecosystem. But Sam, continue. Sorry, man.
Mary, can I ask Sam a few questions on the BNB side?
Of course.
So
you
say you're passionate about BNB, right?
I wouldn't say passionate. I'm an emotionless investor, to be honest. I believe in.
So basically, BNB you just have a big bag.
Okay, but
that's I believe in
passionate equals a big bag of BNB.
If I get to finish what I'm saying, because I've sat very quietly for half an hour. If I finish what I'm saying, I'll explain why I believe that there's fundamental value in BNB. I think one interesting thing is that BNB has been pretty much going up since June, whereas Bitcoin has been going up for 7 days. So there has been a separation there in the price action. And again, I believe that is because there is demand on the token due to the ecosystem. I mean, the different, if we want to try to compare SBF to CZ, I see CZ as more like Elon. He's a relentless entrepreneur. He was in Bahrain 24 hours ago. 2 days before, they got a Swedish regulation. Binance has hundreds of regulated subsidiaries worldwide. This isn't someone in the Bahamas paying off politicians and spending tens of millions of dollars on stadium. This is someone who I can see is trying to build fundamental value for their business. And there are so many income generators: Trust Wallet, CoinMarketCap, Binance Exchange, the BNB chain. All of these things are not only generating income for Binance, but they're generating demand on BNB. And that means there's fundamental demand. So when I look at Bitcoin, I believe Bitcoin is at this moment, priced on psychology. It's not that. How can we attribute fundamental demand to it? Because there's not enough use cases. Whereas for me, I look at BNB, and it is this is nothing like FTX, because FTX didn't build an ecosystem like this. So that's why I think.
But Sam, therein is the thing. You're passionate as an investment in something based upon the expectation of profit from the work of CZ and the Binance team.
Yeah. And that's
And
how I
so
invest in traditional
half of the people that are
stock,
going to buy those tokens from you have got zero disclosures or anything, or have any comprehension around those things. So to think
No,
that
you're right. You're right.
to think that in the future can operate with zero disclosures and is not a security, is
They're
is
not
like a
gonna let the
fundamental.
number one
Let's jump
exchange
off.
go unregulated.
I want to jump away from
I agree
Binance
with
for a bit,
Simon
Sam.
I do
I
agree with
want
Simon that finance.
I
I can talk
want to.
about what I think about the markets as well if you want, and where crypto.
Yeah, I'll do that. I'll do that in a bit. I'll do that in a bit, Sam. But I want to do one thing quickly, since Frank is on stage, and we were talking about him earlier, and we got Tone on stage. It's pretty cool. We got a Bitcoin Maxi and NFT Maxi on stage. We got a few NFT Maxis.
I got 20 minutes, Mario. Then I gotta go.
How many minutes you giving me today, Tone?
I got 20 more.
20 is more than enough. All right.
Bring up Richard Hart, and then he'll be gone.
So Richard, yeah, let me actually invite Richard. That's revenge. You only give me 20 minutes.
I would love to hear why a project moved from Solana to Polygon. You said I would love to hear this story.
Yeah. So all right. So I'll give you an overview, very brief overview. So it's actually a funny story. So the guy that leads the NFT side of our business told me about he's deep into the Solana ecosystem, obsessed with Solana. Now, I was initially a bit bearish because I saw Solana as just initially, like that was like a year ago, because I saw Solana as an ecosystem that I'm like, why do we need Solana if Ethereum is sorting out scalability? What's the purpose of Solana? Then I slowly understood that the community, how big of a role community plays. Now, I know community is an overused term. And DeGods launched as a top project on Solana. And slowly I got in, I think we're invested in DeGods. I think we are, don't hold me to that. I'm 80%, 90% sure. And they were the number one project on Solana. They had an incredible community. Frank, who's the founder, very creative guy. And in the NFT ecosystem, gamification is looked upon very favorably. In the token world, gamification is not looked upon favorably. And then what happened recently is I think, and correct me if I'm wrong, and Frank, I'll give you the mic in a bit. He got an offer from Polygon for a few $1 million, I think $5-10 million. Again, Frank, you're going to correct me in a bit, to move from Solana to Polygon. I think it's on both chains now.
Wait, got an offer from Polygon? Isn't it like a decentralized ecosystem? How does it give you
Polygon Studios. Frank, correct me if I'm wrong, because I'm saying the wrong thing. I'll get a bit of hate. Go ahead, bro.
Worries. Yeah, it was 3 million. We made it all public, everything about it. But dude, Tone, I wanted to just say too, I like started in the space hardcore as a Bitcoin maxi, and I still hold a lot of those principles today. I think that NFTs are a little bit different than what people give it credit for. And I think that at the end of the day, we were talking about fundamental value of NFTs earlier. My one comment on it is, when comic books first came out, they weren't necessarily collector's items. They were just something that people follow the stories of, and like people spend time creating. And it's artwork, right, at the end of the day. But there was a lot of story that happened around it. There were ancillary drops that happened around it. And then over time, when people really cared about certain IPs and certain characters, they were able to expand that and turn it into something a lot bigger. And I think the magic of NFTs is actually something I see that's very similar I'm not saying that NFTs are anything like Bitcoin, but the content cycle around Bitcoin. And I worked at Swan. I was like in the whole like Bitcoin maxi like space, and I'm still a big fan of a lot of people in that ecosystem. And I still am a fan of you, Tone, by the way. I love a lot of your content. And yeah, I just think that there's like a lot of content that gets created and a lot of people that care about the NFT ecosystem 24/7. And I think what that creates is this level of emotional bond, as silly as it might sound, around these cartoon JPEGs that leads to value creation and value capture in an interesting way. So I think that, yes, there will be more fundamental technology shifts with NFTs, whether it's ticketing, whether it's more forms of collectibles, etc. But I also think there's something to be said about the fact that people are just here talking about these, like the cartoon JPEG NFT ecosystem 24/7, and the content continues to grow. The number of creators in the space continues to grow. I think there's a lot of the space that's really shady and honestly just like pretty shitty and scams. But there's something that's very pure about the idea of people just owning digital collectibles and trading them. Yes, that's like something that complicates it, but at the end of the day, it's like these people forming communities that are pretty die hard. And that's so much of what appealed to me about Bitcoin maximalism, is it just gave me principles in a way that I was like, man, there's all these other people on the internet that have these strong set of principles, and that was very exciting for me at the time when I was 20 years old. I'm 23 now. And so, yeah, I think that there's a lot of fundamental value that might not be as explicitly clear with NFTs because of a lot of the noise in the space.
But Frank, what can you build on that emotional bond in that community? What other utilities you can build? I know the answer, but I'm curious to hear your answer and see what Tone and Simon think.
Yeah, I think it's a great question. My best example that I give. So I was part of the startup accelerator called Y Combinator, and in the accelerator, you get access to this private forum called Bookface, like Facebook backwards, and it's one of the most high value communities I've ever been a part of. On that forum, it's only Y Combinator alumni that are allowed in, and you get access to like all these CEOs of like Dropbox, like Robinhood, and like all these massive businesses that have been built, and you get to like just connect and contact people there, and they're more willing to talk to you back because you have this shared connection. And so when I think about the best form of NFTs, it really is a digital online membership club. And what can you do with that, and how can you leverage that to build more and more value on a networking and personal level with people in the community? Like that to me is something that it's very simple, but I think done well, it can be really powerful. Like, for example, we have holders. I don't even want to show like our project. I'll just say in general, a lot of projects have holders in like every major city across the world, and these people are spending all day on the internet talking about the project, meeting other people that are holding the project. And so you can extrapolate this out to even like, I think this is a big goal for us this year, is how can you make it feel like a superpower that you hold the NFT, that you can go to any city in the world and you're going to have friends. You can go and just hit up the Discord or hit up the forum and say, hey, I'm in this city. Does anybody want to meet up? And if you create a strong enough emotional bond around the actual people within the community, and the people in the community are just cool, like there's hedge fund managers in the project. There's like ecom legends. There's just like people. There's like famous actors. It's just a lot of cool, interesting people. And if you can create the culture where people want to meet each other and get close to each other, it's just something that's hard to price, honestly. And it's something that it just really depends on what people want to pay for it. And some of these numbers might sound ridiculous to some people, but I'd say like,
yeah, no, Frank. I have no problem with the free market deciding how much a picture of a monkey is. Like, I really don't care. Like, if the free market prices it at $18 million, that's fine. I'm not interested in it. I try to explain to people why it's a little overvalued. I used to collect comic books. I used to collect basketball cards. So I'm all for the free market determining the value of something. My problem with NFTs is the bullshit and the lying that surrounds claims. Claims like this is true digital ownership. It's not. It's bullshit. Okay, so my problem.
But you can't. But you argue. But you can't just keep making the argument that so the only argument you seem to have, Tone, is just on the blockchain itself. I'll make a better argument, Tone. I'll make a better argument. So Frank, you said the community is everything. So would it like then how's the risk reward in moving from one community to another for $3 million? Like, doesn't that go against the whole concept that community is everything?
No. So I'll tell you exactly kind of the thought process there. So Polygon right now has some of the biggest brands in the world, some of the ones that we're talking to right now.
And by the way, man, I fucking love Polygon. I've loved them for a long time, just for the record.
Totally.
But
and
go
I
ahead.
appreciate you making the kind of like the counter argument to it, because it definitely makes the conversation more interesting. So when I was looking at it, I look at Utes, and part of the idea around Utes is it is a large community of people that we're going to open up the IP rights, not just to the project, not just to the NFTs themselves, but to the actual brand of the so the Utes wordmark, trademark, etc., to all the holders. And one of the ideas was, hey, like, how can we leverage the fact that we have this strong online community to get a lot of free perks and membership exclusive perks for holders of our community? And so you look at the chain, and we have DraftKings, Robinhood, Starbucks, Nike, and then like that's just off the top of my head. And then there's Reddit, Meta, which is Instagram, Facebook, Oculus. And so you look at all these different opportunities that are there, and there isn't really like a dominant NFT project on that chain right now. And so we look at it as it's difficult because they have way less volume than Solana right now. But we looked at it and we thought, hey, like if we can turn Utes into a project that is constantly getting inbound from large brands, that we can then take the fact that these brands want to enter Web3, metaverse, crypto, whatever it might be, and turn that into something that's exciting for people that are holding Utes, and use that to get Utes into the eyeballs of millions of people. To me, it's a high risk, high reward play at the end of the day, and we'll see how it plays out. But that's the thought process. And in terms of the money itself, I mean, Utes is one of the biggest NFT projects in the world, and so every blockchain was honestly like offering us something or another. Protocols were out, like in terms of the protocols and their business development side. Because I know, Tone, you mentioned that it's a decentralized protocol, and you were absolutely right. It is at the core, but I mean, whether people like it or not, these companies, the laboratories or labs version of that uphold the blockchain, they definitely have a budget in terms of marketing, business development, et cetera, which we can debate whether that's good or not. But we just saw it as a no-brainer. Strings-free capital and in this ecosystem, it's kind of like hard to, it's hard to say just, oh no, it makes no sense, especially when we see a lot more upside with the brands on Polygon right now for what is essentially an IP.
Real quick. It's obviously a no-brainer when you're being offered $3 million to switch blockchains. But my point has always been that all of these blockchains are going to compete, and next year somebody can offer you 5 million because they printed a bunch of tokens, right? And this is basically the crypto space. There is no allegiance to any of these tokens. They are going to compete with each other.
Look at this. Look, Don, you got Frankie. Before I go to Alex, take a jab at Bitcoin, man. Tell him like you're one of the top NFT projects, and you love Bitcoin. You're a Bitcoin max. Stop being political. Take a jab. Why didn't you launch? Why didn't you launch on Bitcoin? Why didn't you launch on Bitcoin?
Zero jabs against Bitcoin.
No, but why didn't you launch on Bitcoin though? Because there's a good reason.
Bitcoin does have NFTs.
Go ahead, bro. Take a jab. I've just muted everyone, Frank. Take a jab.
Tone knows this. Being someone that is genuinely a big part of me is the Bitcoin maxi. I'm not like as hardcore, but I don't think that the Bitcoin community is really looking for NFTs, to be totally honest. And so it wouldn't be a product market fit. And I don't want to be a culture vulture and try to like go convince Bitcoiners to get into NFTs. Like, I was anonymous for a year, but I didn't use my platform. So my real name is Rohan, and I was like making a lot of Bitcoin content. I made this really viral website called Bitcoin or Shit. And I didn't want to use like whatever platform I built in my like previous life to grow the project. We kind of did it without doing any of that, because there's this term in Bitcoin culture. What's it called? It's like affinity. It's like an affinity scam, right? Where you say, oh, this thing is like Bitcoin, and so you should get it. And so we didn't want to go down that road at all. So I don't think that there's a product market
I agree.
with NFTs.
I agree. I've said this on Mario Spaces before. It is very difficult to build an NFT project on top of Bitcoin because your pool of potential users or speculators or investors suddenly becomes Bitcoin holders. And they are very, very reluctant to separate themselves from their Bitcoin on anything speculative. So it makes sense to build all of these NFTs on another platform because now you are using the holders of that token. And if the holders of Solana token, they're already proven that they'll invest in crazy speculative, stuff. So your pool of users is completely different. I totally understand that part of the business completely.
So I want to comment on what you said about the chains and how more are going to pop up. I actually totally agree, and I don't think this is we got a lot of backlash for even making a move because in the same way there is Bitcoin maximalism, there's definitely Ethereum maximalism and Solana maximalism and Cardano maximalism, and there's maximalism across all these altcoins across the board. And I just don't look at it like that. I honestly think we look at it more like a database. Like I try to consider ourselves like a practical team, and like we try to look at things from first principles. And so to me, the blockchain itself and the technology of the blockchain itself actually doesn't matter all that much, honestly. And this has caused a lot of controversy, even me saying that.
On that point, though, Tone, let me add one thing real quick. Which is basically like, I think, and this is like kind of playing to Tone's point too, which is, I think, here's the fundamental risk, right? With like, I think some of these NFTs, it's two things. So and they both have to do with culture. So I think the first thing, to your point, Frank, with the databases is what we're seeing now is if a lot of these blockchain networks do not enable native composability between them, you now have a world in which you have like 50 basically siloed off different databases, and now you're basically just back to square one, which is where we are now. That point we were making a Tone where it's like American Airlines has their database, Delta has their database, and now there's all this friction the moment you want to go between different companies. But then I think the second point too, that I think this is, I don't know if Tone's directly said it, but I think I can sense it in sort of the pushback, which is that the danger, I think, coming from, a Bitcoin world is that a lot of the key principles that Bitcoin was built on top of, in regards to self-sovereignty, in regards to decentralization, all these aspects, the risk is that if you bring in a huge cohort of people through NFTs, which is what we've seen, who are all fundamentally interested in different value propositions and not those initial ones, what happens is that you now have the majority of people in crypto writ large that don't actually care about the core tenets that made the space exist in the first place, and how that actually translate in the real world is people vote with their actual policy votes in terms of who's elected, and with their dollars for systems that don't actually uphold the thing. So I think there's that very careful balance, and I think it's why these debates are so important. And Tone, correct me if I'm wrong, but I feel like that cultural side is part of what you're speaking to when you see some of these things come up.
It's less cultural and more, it's exactly what Frank said. He sees these things as databases. Solana, Polygon, whatever else people are building their NFTs on. And I also see them as databases, and I come from the Wall Street world where I used to work with databases. Literally, I used to code stored procedures. So to me, these are databases, and I don't believe in their decentralization claims. So I have no problem with the NFT itself, but the hype surrounding it and the bullshit, claims that it's ownership and it's decentralized. I mean, they're basic. Most of 98% of the people are just straight up lying.
Yeah, I agree. I think that the way that most people in the NFT space, I think even whether they say it out loud or not, and I think that's what you're hitting on, Tone, I think they're just looking for a good experience. They're looking for like a good JPEG, a good time, funny memes, enjoyable people that they meet, like the basic stuff that has less to do with decentralization. But I think that it is a spectrum to a certain degree. And so just the fact that you can understandably, you still need centralized marketplaces to verify which collections are legitimate or not for a basic user. But yeah, the idea at the core is okay, I can go make a derivative of Bored Apes and have the exact same picture. And technically speaking, it could be a different picture. It could point to the same picture. And technically speaking, it could be the same thing and ruin the provenance claims. But I think that if enough people, on a social consensus level, just agree, okay, this is the original Bored Apes, and we're all gonna look at the marketplace that verifies that contract is the original one. Fuck it, it's the same thing. And I think that is pretty much the extent of what people are satisfied with in NFTs. And I think there's definitely a spectrum. Some people care more about decentralization than others. But I look at it a lot more on the cultural side. And I think that it's just like a flex, right? Technically you can have a fake Rolex. You could, you can get one. But it's you're buying it because people that are buying the real ones, they want to buy the real ones. And so that's essentially what it comes down to. And I think it does decrease friction a little bit, whether you can verify if something's real or not, if you could do it on the internet using a blockchain database, etc. But I want to make one point before I got cut off, just to finish this. I do see them a lot as databases, but I think that people with Polygon get it a little bit twisted, where I don't think Polygon is throwing and cutting the type of checks that people think they are. They just have a really huge lead on onboarding some of the biggest brands in the world when it comes to both technology and culture, and their pitch to new brands. So let's just say that they have Nike right now and they want to get Adidas. Well, their pitch to Adidas is, hey, we have Nike, we have Reddit, we have Facebook, we have all these brands already. Do you want to go start on some new blockchain with no other big brands, or do you want to just come to us where they have this entourage effect? And so we just saw that as the no-brainer, whether there was money involved or not. And the reason the money was involved is because it was involved in every conversation that we were having just by default. So we'd be stupid not to take capital. But in reality, I think it's the entourage effect of brands that I think it'd be really hard for a new blockchain to come out and usurp all of the different brands and lock in terms of long-term contracts that they have on that platform. So that's the bold thesis for launching an NFT, quote unquote, on Polygon. But yeah, I'm not confused about it. I don't think I think they are all databases.
So do you think Polygon flip Ethereum or Solana?
No, for sure. I don't think it's likely. And I think that at the end of the day, Tone, like for me as an NFT builder, I almost wish that everything was denominated in USD. And I wish that the volatility of crypto wasn't as involved, because I just look at it like it is the easiest way to communicate to consumers. Hey, like, do you want to be part of this dope membership club? Like, we're trying to build this new format of a membership club where hopefully we can get a lot of interesting perks and make it a really enriching experience to be a part of it. And it is a very much like, hey, this hasn't been built yet in the way that we wanted to, but we're trying to iterate and get towards that direction. And so, yeah, I don't know what's going to flip what. I just think we're looking at where can we get people that align with what we're trying to do. And if they want to be a part of it, then let's make this compelling for them.
Look, Gabriel, I wanna go to you because you guys did a massive raise. I think it was for equity with Daigaku, sorry. And look, what really excites me about NFTs beyond the community, the emotions related to it, which I think is more short term to get a project ongoing. But what really matters, in my opinion, is the utilities built on top of this, and even moving away from the physical world, utilities within the virtual world, within the Web3 world, like integration within different games, integration within different metaverses. What's your strategy like, and has that changed as the market, as the market matured and collapsed?
I gotta jump off, Mario. Thanks for having me on, man.
Don, I expected you to debate more, man. The tone I know is a lot more aggressive than this, man. You were too soft.
Next time, Frank and I kind of agree. But we'll do it again. You gotta do that January 6th, man. You gotta redo it.
The January 6th space, yeah, bro. It crashed. I'm gonna try to get Richard. Richard will make it for a good debate. It's been a while since you're gone, Tone. Maybe I have permission to bring in Richard now. Good to have you, Tone.
Later, guys.
Yeah. So Gabriel, did you get my question regarding the long-term utilities? Like when I wanted to invest in NFTs, it was less PFPs, more in-game assets. Now they're becoming those two things are kind of coming closer and closer together. Where do you stand?
Oh, thank you. I appreciate it, Mario. Yeah, we raised 200 million to make Web3 games. I have a background in mobile gaming. I made several multi-billion-dollar free-to-play games on mobile, and been working in games since 1999. And we have how I see it is we have an Unreal Engine for graphics and physics and
your mic is Gabriel. Your mic is rubbing on something. Not sure if you can fix it, but we can hear you fine.
Yeah, I got it. Okay. We have an Unreal Engine for graphics and physics, and we have lots of tools to make video games, but we don't really have economic tools. And we sell the industry sells $120 billion a year in virtual goods that are just on Web2 databases. And I see Ethereum as a superior economic engine for video games, where instead of spending $120 billion a year on Web2 items, they can move that spend over to Web3 items. It's basically a no-brainer, but video games don't really have a global kind of economic engine, and every game monetizes through their in-game economy, and Ethereum is going to enable those in-game economies to be on one big shared global system on Ethereum, and that's going to dramatically increase the size of the game business, because instead of all of this money just going to entries on a Web2 database, they're all going to go on. All that money's going to pour into Ethereum instead. So I just see it as we're just moving from inferior technology, where I personally made a lot of money selling items on my Web2 database. So I see this, I say, well, I had players spending tens of thousands, hundreds of thousands, in some case millions of dollars. Why would they want to do that for a game? Once they're done, they don't get anything, versus where they get an asset on Ethereum. So it's just a no-brainer, and it's a natural. It's going to be a natural transition, because people are already spending this kind of money.
Gabriel, look, I've been telling people. So my show has really gone outside of just crypto, especially since FTX. It's more of a mainstream audience, and the main discussion I have with people when I talk about crypto is the biggest use case, in my opinion. I think the next wave of adoption will be gaming, Web3 gaming. And anyone that's not in crypto, this is probably the most important part, in my opinion. Are you on that boat, trying to look at it objectively without any biases? Do you think gaming will be the next wave of adoption within the Web3 space? I see Fidgetal and Drew putting a 100% emoji, so they agree. Burden agrees. Where do you stand? Ninja agrees. Okay, not bad.
Well, gaming took over the world through free games. It dramatically grew the audience by making them free to play. And NFTs are about to go through the same evolution, where a majority of them are going to be free. So you can imagine billions of people downloading games and receiving free NFTs that may end up becoming rare and valuable. And in my opinion, how people receive their first ETH won't be by going to Coinbase and trading some US dollars for Ethereum. It's actually going to be because they played a game and they earned an Ethereum NFT that they sell to somebody else who wants it, and that's how they're going to get their first Ethereum, which scales much, much better. It can get to everybody. So I think we're going to see the whole world having NFTs in the next 2 years because they received them for free. That's how you onboard everybody.
Okay, so I've got Brad Mills, and I know a lot of hands are up, so we're gonna go to the panel in a bit. Brad Mills will be coming up to debate this point because he's anti NFTs and he's always balanced out the panel. OG Bitcoin Maxi. So while waiting for Brad to come on, the next question I have for you, Gabriel, and again for the audience, this might sound a bit technical, but I'll simplify it. So you can, when you launch a project, you can raise money through equity, like any business. You can raise money through selling NFTs. And you can launch a token and raise money that way, and even 2 tokens. So where should people invest? That's like the simple way of asking it. And more accurate way of asking that question to you, Gabriel, is where will value aggregate?
Yeah, like I was saying, I have a totally different view on this. Video games, 99% of them fail because nobody plays them. And if you talk to any game developer, their biggest problem is just getting people to download the game, which is why I used to spend roughly $600 million a year on marketing. And so everybody saw Game of War ads and mobile strike ads and all that stuff everywhere. So NFTs are actually a very extremely powerful marketing tool, which is why I don't believe many of them will be sold in the future, because people will just be lining up. If you could see, I've got basically I got 500,000 followers on my Twitter account just because everybody wants the free NFT that we're making, and that's going to scale. There isn't a single person on planet Earth, maybe Bill Gates, that doesn't want a free NFT from us. So I don't really see the point in selling them when you can get something much more valuable, which is attention.
Ninja, Umbrella, did you have any questions for Gabriel before I continue with mine? Maybe Burden or Fidget or anyone else?
Yeah, do you mind if I jump in real quick? Because I think
go ahead, bro.
If
Actually, I'd like to. Hold on, Fidgetal. You talked a lot.
Go ahead, Ninja.
So while I got you, thank you, Gabriel, for coming on up here. Yeah, Gabriel. So a few questions for you. Tell us how you feel. Obviously, you actually enlighten the audience. I know a lot of it, but I don't know the full story on kind of how your drops work with the free NFTs, and also maybe talk about the digi villains that are coming.
Yeah, so we dropped a free collection back in August, and you'll notice a lot of digi collections, heroes and spirits and much other stuff that we've done through Limit Break. But every single one of those has been given for free to the people who own those digi Genesis. So we haven't sold anything. We have a villain. The first time we're going to be giving our NFTs to people outside of the Genesis collection owners are happening with the villains, and then we have a big NFT drop on the Super Bowl, where we've got a commercial for Digi, the Super Bowl coming up in a couple of weeks, and we're going to be hosting a free mint through a QR code. So basically, 100 million people are going to see that, and it's going to be a 10,000 NFT collection, where all you have to do is scan that QR code, and if you're fast enough, you'll get it. So we're really taking this whole free NFT thing to a real commercial scale, actual scale, and say, okay, people don't necessarily have the money to buy these, but everybody wants one. So let's create something really rare and interesting and fun, and just give them away for free, and let's see what happens.
Dude, Gabe, you were so sexy when you talk about free NFTs. Oh shit! I didn't realize I was on mute.
I get turned off by free NFTs. I get turned off by it. Actually, no. I'm lying. I'm trying to play devil's advocate, but I can't
Oh,
there. I
so
think
this
free
is the
NFTs
real
is the best
drama,
way.
Mario.
I think free NFTs is the best way to acquire users. So no, I can't
Well,
play
it's
devil's
not just
advocate here.
that. It's how you
Hey,
it's how you
Gabriel, can you?
onboard. Well, can I just say
Yeah, go ahead,
quick,
Gabriel.
quick,
Go ahead.
quick statement? Quick statement. This is how you get. Everybody says, "When are we going to scale?" Well, this is how. Like NFTs don't really have a maximum value, but they all cost like pennies to make, right? We can give them out to all 8 billion people. So when people say like, well, when is everybody going to get a Coinbase? They don't need one. Okay. They just need an app, and we can put NFTs on the App Store now, and everybody can get a free NFT. And that's how you get the entire world on blockchain. And you can do it in a year. It's not going to take a decade. You can do it in 1 year.
I have before going to Ninja. Sorry, Ninja. Just one quick question, Gabriel and Frank. I want you both to answer that question. Gabriel, you can go first. For the audience that is not in the NFT space, we talked about free drops and free NFTs and different utilities, and where the value will aggregate, etc. Where can people? Why do you think people should even care? Like in 3 years' time, people are looking at crypto now. They look at NFTs. Like my mass audience, I stopped accepting sponsorships because when I'm doing a space about, let's say politics or events or whatever, I don't dare mention an NFT project, even blue chip NFT projects. And like sometimes I'm worried that people just call me out for having a PFP, NFT PFP. Like the sentiment is just so different to what it was before. How can we explain to everyone that, hey, like there is true utility there, the space is, it continues to grow? What would be the best way to articulate this to an audience that's completely outside the ecosystem and is very, very concerned about the space?
Well, I can only speak to like the 2 or 3 billion people that play games. They already spend money on virtual items right now, and they're just going to become NFTs instead of just Web2 virtual items. So it's a no-brainer there. So we can get a third of the world through the App Store, and it's going to happen in the next 24 months max. So it's just going to become part of the culture worldwide. It's just inevitable, and it's going to happen very, very soon.
What about the gamers
I think
that still hate NFTs? Like I'm developing game for Faith Clan, and that's the biggest pushback right now.
Yeah, that's because people see the unlimited price size, like of a $1 million board game, and it scares them that items are going to start costing $1 million in a game. That's like fundamentally the problem. So when Reddit gave away their NFTs, or they charged like $10 or whatever, like these are hardcore NFT haters, and they just didn't care because it was so cheap. And so they just see the board. It's really the board ape prices to scare the hell out of them, and they think, oh my god, game developers are going to start making like $10 million NFTs, and all the games are going to suck. But when they get them for free, like they're not gonna complain, right? Like this is the ultimate way to do it. Like the big problem with Web3 has been all the cash grabbing, grifting of $20 million mints, $50 million mints, where they make all the money in like 2 hours and then they never make a product, right? With us, we gave away our NFTs for free, and the only reason they have value is because we keep working on them. So that's the right way to do it.
I want to be
Can I
Simon
ask a few questions?
before you do that,
Yeah.
Simon. Do you mind if I just get Frank and Justin? Or Justin just dropped out. Fuck, perfect. Worst timing, Justin to drop out. Are you there? No, Justin's still there. Yes, I want to get Frank and Justin to answer that same question, and to kind of add on to Gabriel's, like NFTs is seen as a way to make money, and that mindset needs to change. As NFTs is purely to own something. It doesn't really have to increase in value. It's purely owning something. Like you own things in the physical world. You own an expensive watch that can go up in value. You own a house that can go up in value. You own toilet paper that will not go up in value. So NFTs are digital ownership. NFTs is not a way to make money. It's probably a bit of addition for anyone listening. But Frank, how would you tell people outside the space why they should still care about NFTs? And then we'll go to Justin.
Yeah, so I'll say this. I've been pretty vocal about this recently because I think that Gabe Leiden is probably one of the best representatives for NFTs. He's like popped up and become one of the best representatives. And when he's in his bag, I've been saying it, like when Gabe's in his bag, sometimes Gabe, I love you. You can go on like tangents and stuff, but when he's like really locked in, I've never heard someone articulate like the obviousness of NFTs better than Gabe. So I'll try my best to follow. I mean, for me, I look at it, the best comp to me is like the trading card market, right? Like, the magic of like trading cards, let's just use basketball cards as an example. Like what makes a Luka Doncic rookie card valuable? Well, it's because there's people that want to buy the Luka Doncic rookie card. Why do people want to buy the Luka Doncic rookie card? Because he performs really well in games, and like he's just a beast, right? And there's a level of like irrationality of like, this is just a piece of paper that some company graded at like between PSA 1 and 10, and that's what gives it its value, and then the fact that it's a good player. And I think about NFTs being that, but for digital content, digital IP, etc., where people are essentially speculating in the same way they are with trading cards at any given time based on how a player is performing. And it's just a more liquid live market for that same type of consumer behavior. And so I think that where Gabe is totally on track, though, is the future of NFTs is very likely going to look a lot more like mass people buying a ton of things, and whatever surfaces to the top will tend to have the most value. And so I just find myself agreeing with what Gabe is saying more often than not. But that's my addition to it, if any. But I think Gabe just lays out how much of a no-brainer it is, where, again, like if you have an asset and you can compose it and use it on other platforms, it's extremely powerful for marketing, like Gabe mentioned, where let's just say that there's a community of 10,000 people and a new, let's just say a new membership club pops up and they want to get their first users. Well, they can go ahead and just say like, hey, everybody that has access, everybody that holds this digital collectible can now get access to this new one that's coming out. And so now they've been able to direct market to a community that's already been built, a culture that's already been built. And so it just creates a new dynamic around it. But I think at the core level, it's the same consumer behavior that we've seen throughout the history of time, which is collecting things. We just happen to spend more time on the internet, and being on the internet and using software, you're able to imbue more power and things that you can do with that digital collectible than you might be able to do with a physical collectible. So yeah, like if you can flex your Lambo on an NFT, it's like now you don't have to go drive and hope that the girl that you have a crush on is like gonna see you driving the Lambo. She can just go to your profile and see that you own a Lambo to some verified degree. I use that as a extreme example just to illuminate the point that there is this decrease of friction to flexing and culture that you see already with sneaker culture, with trading card culture, with car collecting and luxury watches, and all of these things can just decrease friction to the flex. And I think there's a lot of untapped value there. I mean, Rolex, my favorite example, I don't think people know this, but not a lot of people know this. Rolex manufactures about 1 million new watches a year, and they make about $8 billion a year in revenue, like Rolex. You know, and that's a super luxury fucking brand, known for being exclusive, known for having expensive items, but they're manufacturing 1 million fucking Rolexes a year because the demand is there and there's enough of a brand notoriety around it. And so, yeah, I think the digital collectibles have a lane to do that. I don't know if anyone's cracked that code for the long term yet. I think games are going to be a part of it, but I think luxury and items as well. And so will mass adoption around like trading pack cards, etc., which is essentially what a mint is. When you buy a trading pack card, like for basketball cards, you'll buy like a 10 pack and you hope you get a LaMelo Ball rookie or something along those lines, or a Zion rookie, but you might also not. And I think that's what NFT mints are the best comparable in the real world today. And those are all pretty massive markets.
I'll go to Justin and then we'll go to Simon, then Fidgetal and other panelists for questions. Go ahead, Simon. Oh, sorry, go ahead, Justin. My bad.
Thanks, Mario. Yeah, I mean, I think what a lot of people don't understand is just how big the difference is between free and a very small price. And what I mean is having somebody have to buy any ETH at all, call it even, a couple pennies worth of ETH to perform some transaction or pick up their first item, it reduces the number of people that get items by 1,000-fold, not by a small amount. And when you compare that,
that's
to
a
free,
great point. That's a great point.
This is the thing that we discovered. This was a single thing that started the freemium gaming revolution. So my former company that I started was Zynga, and I built our first poker game on the internet on social network Facebook. And so we started growing that, and later we had Farmville and Words with Friends and all these other games. And that was the fundamental insight, was like, people don't want to pay for games, and we had to figure out a way to make it possible for them to not pay for the game up front and just pay as they went, right? And so that's how the freemium business model was born. I think what we're seeing here with NFTs is like the same on-ramp will be true. If you can figure out a way to give people free NFTs in a way that you can actually sort of power the business later and figure out a way to make the money later, then where the company and the sort of holders can win, that's going to be the model that gets all the adoption. So I totally agree with Gabe. I think that'll happen fast. And the trick is like it doesn't work with every type of business. You know, there may be a lot of businesses that can't give away free NFTs, but those that can, where they can use it as a way to get holders and sort of people paying attention to their product, will be able to grow the market for everybody else. And I think like over the next few months, you're just going to see a ton of it. So, I mean, I know that like we're lined up to just start giving a ton of free NFTs out, and I'm really excited about it. So
would that work? Just a quick
the space grow.
I want to ask a quick selfish question before Simon and Fidgetal. Sorry, guys, but it's a selfish question, Justin. And very, very briefly, because I think the audience won't relate with that question as much unless they have a project. Like, would a free NFT work for if you have a PFP project? Would a free? Should we just do it like the best way to do it is like an airdrop of a free NFT PFP, for example? How would it work? Like, what's the best way to get free NFTs? Because I know how it works in a game. You just give out in-game assets for free. That's a no-brainer. But for PFP projects, is there? Yeah, you could do airdrops. Like I think the Digigaigaku, whatever. Sorry, bro. I've been out of this space for a while. Don't get pissed off. But Gabriel, Digidaigaku. Yeah, there you go. You guys did a free airdrop. Is that correct, Gabriel? Correct me if I'm wrong.
No, we just did like put up a website and just let random people grab it.
Okay, well, for free. So yeah, not airdrop, but yeah. So you gave out free mints. But did you have to own a Digidaigaku?
For everything else, yes. For everything else, you had to own one to get the airdrops. But with the villains, we have a sign up on. You can see it on pinned on my Twitter, but we have a sign up where you can kind of like enter in for one of the free of the 10,000 that we're doing right now.
Oh, so let's go back to a more broader discussion just for the audience to relate to it. And for anyone that doesn't like NFTs, go through the comments. Tell me what your main concern is so we can address it. I'll try to use the space as an opportunity, and I'll try to use, our reach outside of crypto as an opportunity to tell people, like, hey, crypto is not in the best place, but, the community is still solid. You just don't see it. But I'll go to Simon for the next question, then Fidgetal and other panelists. And good to have Solana, Chris, because I want to talk about Solana in a bit. But yeah, go ahead, Simon.
No, I was just going to ask a few more questions, but if you want to go to another subject, but
Gabe, same subject.
Yeah, Gabe, did you say you got 500,000 followers from giving away a free NFT?
Yeah, I mean, yeah, there's a lot of bots in there, of course, for sure, because a lot of people are trying to game it. But yeah, I mean, that people are. I mean, like, look, what is the counter argument? What is the counter argument to free NFTs? Like, there isn't one. It's obviously gonna take over the world. Just period.
Well, I mean, just thinking of myself, like I haven't signed up ever for a free NFT, and if anyone offers me anything free in crypto, I immediately think they're trying
are you hold on, Simon? Are you a gamer, Simon?
No, I'm not at all. No.
Okay, so that and you're not an NFT community. So I think
we're trying to understand the cultural differences. So, is this a gaming audience, or is this like an NFT audience that you think are following?
Look, it's both. So like how it works is that you can't just make like a billion, like on the Super Bowl, for example, we're doing a commercial, a QR code. We went through a lot of arguments on whether we should do like 5 million, POAPs or just do like a collection or whatever. We just kind of, where we ended up was look, we're just going to do 10,000. 99% of the people aren't going to get it or more. And the whole point of it is to train people to get excited about missing it. The fact that they miss it is the problem. If they can't get to the point where they want it, and they have to want it by missing it, like I want a Bored Ape because I don't have one.
What actually is it you're telling them? Because like NFT is the worst word ever, right? Just in itself.
Yeah. We're saying digital collectibles. Yeah. But yeah, I agree with that. But how it essentially works is like the company or whatever group makes a small set of NFTs and they build a big ecosystem around it. Like we're building multiple games and it makes people want those. And then you slowly open it up to more and more people. And that builds up the excitement that maybe they can get in, right? That's the point, right? So that's all it is. I mean, this is how video games have worked forever. There's always been one of one items, rare items, and so on and so forth. And now it's basically NFTs have allowed anybody, any entity, any company, any person, any artist, just to make virtual items that function like video game items without a game, without even having a game. So now every creator gets the power of a game developer through NFTs, and that's very, very powerful. I mean, you can do a lot of really interesting things, and the attention economy which is what we're in, unfortunately, but that's what we're in.
And
What
so
could be
then,
better than that?
so then in terms of actual ownership, like just walk me through the user experience. So are they like, are you storing the private key for them? Is it like custody?
Oh
or
yeah. For games, you're gonna have to do a custodial wallet, because most people don't know what NFTs are, and you have to. What I'm most concerned about is them getting hacked afterwards, right? Because imagine onboarding 1 billion people, and they have no idea what an NFT is, and they get super excited because they get this rare one or whatever. They go to a website and get drained. So we're going to make it pretty difficult. Like we're actually going to make them have to go through a little bit of education before we're allowing them to move it off of the custodial wallet. Like we're allowing it, but like we're not going to make it easy.
And Simon, just don't hate me. I just literally brought up Igor, who has
go for
free NFT _ XYZ, like and then his banner and his profile is free NFT. So I think all he does is give away, or he's got a platform for giving away free NFTs. Before going to Igor, because I'll probably have questions for you as well. Fidgetal, go ahead, man.
Yeah, so no insult to Frank, but 2 things. One, do not flex your PFP collection on a date. It's not like a Lambo. It will not get you laid. It'll do the exact opposite. So we're not even close to there yet.
I explained so much. Oh, fuck.
2, there was a reason, Mario, why I asked you to bring up Gabriel specifically, and why I do love talking to him and hearing from him is, and hopefully we can keep this in a way that people can understand. And it goes back to something I was saying earlier, which is the tech and the capabilities that NFT brings to an ecosystem, to finance, and to crypto, and to blockchain. And Gabriel, if you could touch just like in a way that people can understand, because people understand gaming. And Simon, to answer your question simply about the value of digital ownership, imagine just being able to take anything you own in any game and be able to use it in any other game. Regardless of the fact that it's quote unquote custodial or crypto. If it's free, then you don't have any expectation of value to begin with. But what I love about what Gabriel's doing, and I'd love Gabriel to
how
give
do
an
you get it
explanation.
from one game to the other when they own the key? That's what
just assume it happens, Simon. Just assume that happens. That there's interoperability, there's fungibility. We're trying to keep it simple for the community.
The Holy Grail, though. It's like decentralization, but centralization. Like it's like it's why it's quite confusing, right? Because
it's not. They're built on chain. They're interoperable because they're on the same chains. It's not that complicated. But if we want another conversation, we can get super deep into it. We'll lose a bunch of people.
No, but Fidgetal, how about can you ask a question I give you, or no?
Sure.
Okay, can you ask question about utility of NFTs for a panelist, including Luca? Because Luca, we did a whole space with Luca a few months ago, and I love what Pudgy Penguins are doing. So if you can ask that question, I'd be grateful. I won't tell anyone. I won't tell anyone I gave you the question. Just keep it between us. But yeah, ask about utility and how they're looking at building utility for PFP projects.
You want me to ask Luca how he's expecting to make utility implementable besides for IP in NFT projects?
Yeah, and make it seem like it's your question so no one knows, just so you seem smart.
You dick. Luca, actually, Luca's an interesting person because I had a random call with him, not knowing that he had bought Pudgy Penguins. I don't know if he recalls, and I've been super interested in utility. Luca, how are you returning value, i.e. creating utility for your project? And actually, this is specifically for you because, Luca, I'm not sure if you actually return the money to your holders while using the IP, or that IP is used, the money from the IP is used for the project itself, and is there any return to the users, i.e. what's the utility?
Yeah, I think there's really 2 ways in which we accrue value specifically. One, I think, is more generalized, and I think is more of the bull case for NFTs, specifically PFPs, how I look at them. And that one is, at its core, I think NFTs are better versions of first edition Pokemon cards, at least through the lens that I look at it. And so when you look at a first edition Pokemon card, for example, there's so much friction there, right? There's inauthenticity issues, which we've seen plenty of times before. And the friction of buying and selling is really difficult. And so at its core, if your NFT is your first addition to your brand, the same way that Magic Gathering has first editions, the same way that Pokemon has first editions, I mean, the list is endless. I think at its core, that in its totality is not to be underestimated, because collecting is a very real hobby, one that before NFTs even came around, I was spending millions of dollars on sports cards of basketball players and soccer players. And I think that functionality at its core is one that's not to be underestimated. And
And I think that is more of like a general use case. And so my theory is
but that's what exists now, Luca, right? Like that's basically almost any NFT project.
Yeah, correct, right? So
Right?
yeah, to the fundamentals. So my thesis is how do I build, the world's first, legacy IP company that's built in Web3 with NFT technology and, IP that lives on the blockchain. And so how I see value being accrued is if you look at how to accrue value to an NFT, top of the funnel, high level brand awareness, tens of millions of people are familiar with your brand. The origin story, the first editions accrue value because they're finite in resource. And eventually just the math shakes out that, as demand increases, then, price will go up because you have this finite resource. I think we've seen that. Anybody who's in crypto, I think, understands that. A thing that I think I'm doing differently and how I really believe the future of NFTs kind of comes in the fold, and one thing that we at Pudgy have kind of spearheaded is the ability to license and monetize, and not just saying, hey, you have the rights, go do a deal. I believe it's my responsibility to build a brand that makes billions of dollars a year. And when I do that, I have this vehicle that is the NFT that mutually incentivizes, for the first time in human history, the brand and the consumer. Because the consumers who believed in me first, the consumers who have purchased this digital collectible or this NFT now have a vehicle in which they can participate in the ecosystem in a way that has never been seen before, ever, right? Where they are now championing my brand. The more they champion my brand, the more awareness they create, the more that top of the funnel expands, and the more that kind of trickles down to the bottom of the funnel, which is this finite resource. How I plan on that, and my vision for this is, if you were to ask me where I see Pudgy Penguins in 5 years and what the best case scenario is we built a brand that impacts tens of millions of people and makes billions of dollars a year in revenue. And that relationship between the holder and us is every time we make a product, whether it's a toy or a t-shirt or a collectible, every time we make a piece of content using a Pudgy Penguin, somebody from the community is getting paid for that. Meaning, if I have 16 toys and 16 SKUs, we have 16 licenses between us and the holder so that when those toys go off and do hundreds of millions of dollars a year in revenue, millions of dollars in perpetuity comes back to them through the form of a licensing arrangement, right? Something that we've seen.
But Luca, why not pool all of the asset holders as an IP pool and return a fixed amount of the total revenue earned from the IP that they are supporting the expansion of that awareness?
That's a security.
It's not.
It's not. You have to. No, there has to be a mutual effort between two parties in negotiating a deal. Some sort of. It can't just be like, hey, you own a Pudgy Penguin and you get a distribution. At its core, that is a security.
Luca, no, Luca. If every Pudgy Penguin, you made an agreement with them that they license their IP to an asset pool, an IP asset pool, and that IP asset pool then earned revenue from all the IP that was generated, independent of which asset was being used at a certain time. I could be mistaken, but I'm pretty sure I'm not because I've done a lot of research here. It actually is a legal way to distribute revenue from the usage of the global IP that everybody opts into. Just a thought.
Yeah, and so we try to explore this because in its Pico form, that would be the goal. Per the firms that we've hired and the opinion letters that we've gotten, it's a lot more complicated than that. And so our solution is on an individualized basis. Now, we've created a tool that I'm not going to allude to. It's too big of a space to even talk about it. But we've created a tech stack that I believe is going to solve this at scale, right? Because right now there's too much friction to do this on an individualized basis. We were actually the first project to spearhead this from a project standpoint, where it said, hey, we're going to make product and we're going to license the IP. For some reason, we were the first to do that. But we learned that the reason why no one had done that up until that point was because there was so much friction. There was weeks of back and forth, weeks of documentation, when in reality, that should be able to be accomplished at a click of a button. But at its case, I think, NFTs, to kind of answer the question simply, I think they're, one, a better first edition Pokemon card model, and that is not to be underestimated. I mean, two, there's one that I didn't bring up, but emotional utility is also something that I think people don't talk about, but I also think is not to be underestimated. The ability to interact and socialize and create friends and have access. Disney's a $200 billion company off of emotional utility, and I believe that NFTs are a really great mechanism for that. And then third, the ability to align the interests of the brand and the consumer in a way that's never been possible before, and being able to bridge that gap and translate value through licensing. Because if I create a brand that makes billions of dollars a year, right? And that brand is creating content and product, and that money that I make from selling the content and the product is distributed through the characters that my holders own, then that to me is the most beautiful story that Web3's ever told. That is completely changing IP the way that we know it, and it flips the whole thing on its head.
So I like that, and I think it was an interesting dichotomy. Often PFP projects are building towards getting to a game, right? The end goal, the grail is having a game, whether it was the NFTs to play to earn games. I think it's really interesting to go the other way around, which I'd love to go to Justin and then touch on Frank and Gabriel here. And I think what it touches on is the free NFT aspect, right? Why do you have to sell an NFT? When we talk about the value of NFT being the humanity, and you just said emotional utility, right? What I think is one of the biggest things that Web3 and NFTs has done, never in the world, in the history of the world, have people paid to promote a business. Literally being the entire marketing arm while paying to be there. Being able to do that without money is I think the most beautiful crux of the both. So Justin, I'd love to go to you, coming from the position of starting from the gaming and kind of working backwards. And is there a PFP aspect of building the community while building the game first?
Look, I think there's so many ways and there's so many collections that can be part of the ecosystem of any brand, right? And so the way that we think about it is we're building a project called Storyverse, which is totally focused on the IP opportunity that we were just talking about, which is basically, this has never existed before. Holders have the ability to be part of building IP with the creators of the IP and to share in the upside. And we got excited about that a year ago, and we started building the infrastructure to make that possible. And we've been putting out the tools for a very long time now through that project. And what we haven't done yet is started showing people what this will look like in terms of the collections that it'll let people create. And so you probably know that, you know, Spider-Man is a brand, but Spider-Man had comic books, and those comic books are collections. And right now, it's not easy for one of these brands to go put out a new collection that's essentially like a non-dilutive way of extending the brand and the story associated with the brand. And what we're going to allow people to do very, very soon, like in the next few weeks, is to be creating story collections that are animated and interactive and game-like with choices for these brands with characters that people already hold and that they already support. And so this idea of these royalties, we're not waiting on a Netflix show. We're not waiting on a game that's shipping in 2 years. You're going to be able to create these story collections that get dropped or sold or dropped for free to IP holders or a broader audience. Like you can imagine Pudgy Penguins Stories Season 1 as a free mint to anyone who wants it. But, you know, on all the trading volume, the Pudgy Penguins that were used inside of it are getting royalties. This is what we're looking to enable. So the only thing that's better than free is getting paid, right? And if you can figure out a way to combine the two, that's great. Now, like, what does that mean for PFP drops? I'm not really sure. But the point is, like, if you have multiple collections, you have one collection where the value is accruing, and where there's kind of a lot more demand than there is supply, like what Gabe's done. And then you drop other collections that are used to sort of like bring new people into the ecosystem. And like, if you think about it, we've been collecting comic books for a long time. So we know like there's a ton of appetite for that. And we notice it doesn't exist in Web3. And we're trying to give people an easy way to go do it, because we noticed like writers, basically, they're not having the fun that artists are having because they can't make something visual enough to get the attention of everybody. So we went and built the infrastructure basically for them to go build animated comics using the IP that it's already on chain. And we'll see what happens when we do it.
I think you touched on a really interesting point, and I think one of the biggest metas coming into 2023 is there's only so many PFPs you can have in your wallet, right? The blue chips will likely remain blue chips. I think there'll be green chips that'll pump up and down. And I think we're gaming, and also where I love that Blau joined to touch on another way that NFTs really bring value to an ecosystem. But I think that cross-project utilization, meaning bringing value or return on revenue or being able to earn, regardless of what your founder is doing, regardless of which project you're in, but being able to build ecosystems that utilize the IP and the community from already existing ecosystems is a huge, huge opportunity. And I think that's where games come in heavily. Gabe, I just wanted to hop to you real quick. If we can keep it like real simple, why I did want you up here, and one of my most interesting things that you're doing is creating NFTs and standards that allow for more dynamic use within games that could never happen in Web 2. Do you think you could explain that in a way that the average person in the space could understand?
Yeah, I mean, I kind of echo what Justin is saying. Maybe he's looking at what we just put out. We just put out a new contract that allows royalties to be programmable on chain, meaning that I'll give you a very simple example. Imagine I give you a free NFT, and when you receive that NFT, the first person who receives it gets 100% of the royalties on that NFT forever. That's possible now. So this is just a no-brainer, right? Like, who's not going to want that? Like, basically everyone's going to want that, and it's up to the company to kind of design a scenario and an ecosystem and a brand and the excitement and the energy to make that interesting, right? That's what we have to do. We made Digis interesting. People said we raised 200 million, but we raised 200 million. Like, you don't just do that. That's hard to do. And we're doing all the stuff and hiring all the people to make it interesting where people will want this stuff. Ultimately, I think where this is going is just like Justin just said, on-chain royalties are possible. And once you put royalties on-chain, they can go to anybody, right? Not just the developer, anybody in any fashion, in any split. So NFTs are about to get crazy interesting in 2023.
Yeah, I also wanted to touch
Can I
on
jump
something
in
that
here?
the kind of
Can I jump in? Because I've got to go in a couple of
Sure.
minutes.
Hey, Sam.
I just hey guys, I always find it fascinating. I've been on a few NFT spaces, and I find it fascinating that we never get beyond assets with objective value. We never go beyond profile pics, in-game assets, and collectibles. For me, where I see NFTs going, the thing that will make them globally recognized within, say, 5 years is real world use. Let me give you one example, and then I'll hop off, and whether it becomes a conversation or not, and will be interesting. But let's look at what you could do with ticketing with NFTs. So let's get outside the world of gaming and NFTs as we know them. Imagine you're an organizer and you can issue 50,000 tickets. The first thing you can do is prevent the black market, because you can offer resale through your technology and you can take a cut of that resale. So suddenly it becomes profitable for you to use NFTs as your means for ticketing. You can't do that with QR codes. You definitely can't do it with paper ticketing. You can integrate offers into it. You can put venue maps, menus for the bar. You can order food, all sorts of things. You can't do this with QR codes. You can cancel an event. You have security. You can cancel tranches of tickets or amend them if there are issues. These are all things that I see NFTs globally being adopted for. I think that gaming is a huge industry. Absolutely. I think profile pics are going to be niche. Yeah, they're always going to be niche for hardcore NFT people. That could be tens of millions, but I don't think your grandma's going to use it. But I mean, this is why I always find it curious. I sit here and I think it's a fascinating conversation with loads of knowledgeable people, but we never go beyond really what NFTs are now, which are assets with an objective value for collecting and using
So
in games.
actually, Sam, tell me what you think of this one then. Blau, if you can talk about music NFTs. We've done spaces on this a few months ago. Big fan.
Definitely,
So Sam, let me know what you think of this as a use case, because we've talked a lot about gaming and PFPs and community building.
So Sam, to your point, the ticketing use case is an interesting one, and we could probably have a 5-hour conversation about it. One of the first NFT ticketing experiments that I ran was about 5 years ago in 2017, and the core issue is actually scale and block size today. So, if you have thousands of people going through a door on an L1, your gas costs of processing, any type of consumable transaction on chain is quite high. If you're on an L2, you're still sort of limited at scale, right? So like imagine you had a Post Malone show, a Drake show, and a Chainsmoker show, each with tens of thousands of people the same night. Like even Polygon would have trouble processing signatures at the rate that people would be entering these venues. And so like there's just a core fundamental problem with ticketing at scale today. There's also a world where tickets don't even need to be non-fungible. Most tickets actually have identical use. And so that actually is a cost saver in some cases. I mean, again, the ticketing thing is a good point, Sam. And it's I think changing the state of a token from being mint in a mint state and a consumed state, i.e., like your ticket stub, right? Like proof that you attended an event. I think that all makes sense from a theoretical, conceptual and theoretical ways, but we're pretty distant from that happening at scale. And then, of course, you have a central point of failure, i.e., the venue. So, tickets are interesting, but we were obviously talking about IP, and that's of course what we focus on at Royal, which is you own streaming royalty rights that are represented by a token. So that token has emotional value premium because it is a collectible, but it is also backed by a real cash flow. Sorry, just a little cold in Vegas today. So that's what we focus on at Royal. I've always been a huge fan of IP linked to tokens. There is a core problem that's like the elephant in the room, which is
Did you try near field technology? Because the thing is, you don't actually need to use blockchain transactions to emit people using an NFT ticket. The NFT ticket can be used leading up to the event. It can be, but then if you combine it with near field technology, the actual reader that confirms the NFT doesn't need to interact with the blockchain.
Sam, listen, Sam. Here's the thing: if like, there's one company that does this pretty well. It's called Token Proof. They're ahead of the curve here.
By the way, shout out to Token
doing
Proof.
this.
Shout out to Token Proof and Fonts.
I mean, but like people have been talking about this for years, and like, oh, it's just like kind of like, and I mean, no offense, but it doesn't work as well as people think it does, right? Like if it did, it would already exist.
But no early stage technology, no early stage technology works as well as people think it. But if people are just dismissing it, then
it's not a matter of it's not dismissing it. It's just I think the challenges are greater for NFT applications on the ticketing side than they are for other things, so to speak, right? So I'm not saying it's not a good idea. I think NFT ticketing is probably a great idea, but really the purpose of NFTs and tickets is actually both a way to pay the initial issuer back, but of course that has to be enforced by something like Gabe built, where you can actually enforce the secondaries. Otherwise it's useless. So that's like one variable when you think about ticketing. The other variable is there is an access point in the physical world. So that central point of failure means a lot of these ticketing applications could just be built by like some benevolent database thing. And you might not even really need a blockchain for them. So that's like again, when I said the ticketing conversation is like a 5-hour conversation, it probably is. But what I'm excited about more than access, like ticketing is a way to leverage NFTs to value access, and I think that's a really interesting application of not just NFTs but tokens in general. And I think Zero Knowledge, CK Snarks will probably make that evolve in a big way. But the more immediate, and I think the bigger opportunity, because there's still kind of a question mark in my head whether tickets really need to exist on like a fully decentralized blockchain versus like some benevolent, transparent database. That's a whole other thing. But I think with IP, the specific excitement is around composability specifically, where kind of what Justin was saying earlier. Being able to create derivatives, track ownership in a transparent way, facilitate payments, like all that stuff is what always excited me about blockchains for the past however many years I've been involved in this stuff. And there's still a core elephant in the room when you talk about IP. And we do this at Royal, right? Like, you can own a piece of a Diplo song today on Royal. You can own a piece of a Nas song. You can own a piece of the Chainsmokers album. We've made over $100,000 of royalty payments to those token holders, but that's not secondary royalties the way we talk about them in most rooms. That's actually an off-chain, on-chain fiat bridge of actual income origination payments that are happening off-chain that move on-chain and get distributed to all these token holders, right? There is one elephant in the room problem about IP and anything crypto, which is you actually can't enforce the legal agreement on chain yet. So, and Fidgetal, I'm sure
it's solved. It'll be rolling out soon. We can talk.
it'll be rolling out soon, but it doesn't. It's not today, but it's
I
getting
mean, I'll be
close.
honest. I don't. When I brought ticketing up as an example, to be honest, I don't foresee it being decentralized. I see it being run by companies who provide this service to venues and leagues and things like that. But the points you make are clearly valid. But I obviously having been a long-term tech investor, I've seen how we've been able to overcome technological issues very, very quickly, exponentially fast these days. So for me, when you see all the I just wanted to really move, or at least ask people's opinions on other on kind of real world use of NFTs rather than this
Well, so
objective
IP
valuation.
is a real world use in the sense that it's a solution to content that is to ownership of content that is being consumed and that produces some form of income origination, whether that origination happens off chain or on chain. Representing that ownership is in my mind a real world use case. Then the access use case, Sam, that you're talking about is a great one. It extends beyond tickets, of course, but remember, like anything that exists digitally, it's easier to enforce ownership of digital things than it is physical things. With blockchain specifically, I should say. And so the quote unquote real world applications and the phygital per your name, the like physical digital linkage of tokens and physical items in general is pretty hard. And no one's really done it yet in a way that, in my opinion, just an opinion,
It's
makes sense.
coming. It's
Yeah,
coming.
of course it's coming. Everything's coming, right? But I mean, these are conversations that we've been having for the past 7 to 8 years, and I do think it's starting to happen today. But I will always believe that tokens as a redemption mechanism for physical items or for access is probably a better application than actually needing to link a digital and a physical thing. I don't really know what the value of that linkage is unless there is a redemption point or an access point or
Blau,
something
I
to
love
be
you,
consumed.
but we're gonna lose the audience. The whole point was try and keep this as high
sorry,
level as
sorry.
possible.
I'll shut up now.
No, it's funny because that's the answer to Sam's question. Sam, we could have 12-hour conversations about the intricacies of real world applications, marriage contracts, wills, trusts, escrows, land delineations. But in order to bring people on, it takes product market fit, which I've been working on for 4 to 12 years. And so it does take talking about JPEGs. It does requiring talking about communities and IP to get people familiar with the ideas.
I 100% agree. I'm going to get off, Mario. I 100% agree. And I think what Gabe is doing is hugely valuable in bringing, hopefully, billions of people into familiarity with what these things are. Because right now, 99% of the world have no idea what an NFT is. And, as we've said, the acronym NFT is confusing. So I absolutely 100% see the value of where NFTs are today. I fully believe they're going to be used for data storage, for access, for services, and all those things in the future. I mean, and everything being said is valid. And Blau, everything you said, yeah, and I absolutely agree on the IP side as well. So, thanks so much for entertaining my my sort of subject that I brought in there. I'm gonna get off, but thanks so much.
Yeah, so I'm seeing I've got Brad Mills is gonna coming up, Bitcoin OG Bitcoin Maxi, but I do have another message from another Bitcoin Maxi saying early 2011 Bitcoiner, and he's just sitting there praising the discussion about NFTs, and he's not a fan of NFTs. So I like getting messages like this. But going back, this space kind of blew up beyond just crypto a few months ago when FTX blew up. We blew up. So the question is a more direct question. I'm going through the comments. So audience members, I'll go through your comments, bottom right corner. But one question is like, if they want to get involved as an entrepreneur or as an investor, obviously not financial advice, blah, blah, blah. But where anyone wanting to get involved, where do you think the kind of follow VCs. So yeah, I think
Yeah,
it's
I mean, most
that's what I
most
asked.
likely gaming, because that's the tip of the spear for crypto. And like, for the Bitcoin, I'm a Bitcoin maxi myself, but I don't see NFTs as in competition with Bitcoin at all. They're different. It's just they're digital objects. They're not meant to replace currencies or compete with the banking system or anything like that. They're just, I'm a video game guy. I just see digital objects in a better form. That's it. But so I think gaming is the tip of the spear that brings in the world into blockchain. And then after everybody's used to kind of like getting NFTs from their mobile games, which is how it's going to happen, then yeah, they're going to go into everything else, ticketing, whatever else. But I really think it's going to be mobile games over the next 24 months.
Justin, do you agree?
Yeah, I mean, I just think the scale is going to be huge, and the reason for this is pretty simple. Maybe Gabe said it before, but it just bears saying again, which is we've been selling virtual goods to people playing games for over almost 15 years now, in some form or another. There's $120 billion that people spend a year on these items in games right now, and they don't receive anything that they actually get to own and keep. And so there are a lot of things, NFTs is such a broad space. Like we forget, it's almost like saying it's as broad as the world of physical items. It may even be more broad than that because there's going to be more use cases over time. And so we lump all these things together because the space has started in such a small and organic way. But in a year or two from now, like, probably like it'll be more and more obvious just how many more clear use cases there are and how separate these things are. But when it comes to games, there's no like product market fit problem. People are buying virtual items in games that they don't get to own and that they don't get to trade. They don't get to take money out after. Every single dime they spend goes to the developer and they never get it back. And so the value proposition is very clear, which is like, you don't need any of the additional things we've been talking about, as long as someone can now spend $10,000 in a game where they can get even, $1,000 back because they're done playing it and they go and sell their items to the next person. That's still, a better option than going to the app store and playing the exact same game where they don't get to do that. And so from that perspective, like games are just, they're in a unique place. Like they don't need to figure out that there will be new things that happen. There will be tons of new ways to collaborate and use IP across these games that was not possible before. And that could end up being the biggest thing. But that $120 billion in spend is already going toward these items where people don't get to do any of these things that they obviously want, which is just to be able to get their money back out. And so from that perspective, like, yeah, games are going to be huge, and that'll happen in a way where the players don't realize they're interacting with NFTs. And that's what you're going to see over the next year or two. And that's going to be very, very big. But what it'll do is onboard everybody with a wallet, right? And then it'll make all these other things possible, where the friction will go down to then use music NFTs and use anything else, because now games have onboarded, like a billion wallets.
Think just a quick, like, I know Umbrella and Brad, you've got your hands up. I just like want to reset that like people use the phrase non-fungible token to apply to what you said, Justin and Gabriel. Just let's call them digital assets. And I think that there's like a lot of things that get lost in translation when the word NFT is used to characterize digital assets, because there are lots of digital assets that aren't NFTs. And then on the flip side of that, an NFT is quite literally just a token with a unique ID. There are all types of tokens. NFTs originated as, quite literally, the ERC 721 standard didn't even exist when CryptoPunks were created. And the nature of unique token identification, where each item has something that is on chain, a hash that's unique, is helpful and can apply to literally everything. Right? So it's like we think about NFTs as they apply to media because it's kind of the easiest or most visible thing in the crosshairs of the tech. But we forget that like digital assets that are composable, per Gabe and what Justin were saying, barely exist today. I mean, people try to sell. It's so funny. I started playing this mobile game thanks to you, Gabe, and thanks to my friend Jonah. And like, there are people that are trying to sell these boosted accounts, but they can't do it because it's linked to their email, and they could always theoretically reset the password if they sell it to someone else. And it's like kind of crazy that we haven't figured that part out yet, just to create open markets for digital assets. And NFTs just happen to be a big unlock for that. But now I've actually overspoken my phrasing here. I just wanted to reset that NFTs are literally just tokens with unique IDs. That's all they are.
Brad, jump in, man. Before I go to Luca and I'm eating. Sorry, guys.
Sure. Yeah. Been listening for the
You
last
can't.
hour.
You're gonna, Brad. Are you gonna still hate? Like that was a pretty good discussion. What's your criticism now, man?
Well, I have so many things. There's a lot to be critical about this conversation. For one, the kind of like the problem with the last 2 years is a lot of nonsense kind of got invested in, and it inflated these massive bubbles, and a lot of companies like FTX got extremely wealthy off of shilling toxic nonsense and garbage to people, and then took that money. Paradigm, Coinbase Ventures, A16Z, all these guys made shitloads of money off of exploiting the free market and exploiting greed and exploiting these zero interest policy that we were in, and low interest rates and all this stuff, and kind of doing unethical things and in these gray area markets. And then they went and they invested in companies like Limit Break, like what Gabriel's running, and FTX is an investor in that company. So isn't it hilarious that
Well, okay, can I jump in on
that the Super
They put
Bowl,
in a
the
million.
Super
They
Bowl
put in
started
a
with the
million.
Super
They
Bowl
put in.
ad, and now you guys have a Super Bowl ad.
Brad
So
came in
let's-
hot.
Brad,
Brad, let me
always.
respond.
Always.
Let me
Go
respond.
ahead, Gabriel. Go ahead.
So FTX through Alameda put in $1 million. Okay, so it's not like.
But Brad,
Yeah,
why is it But why is it a
it's
bad
also
thing, Brad?
irrelevant.
Yeah,
Like,
but why is it
Well,
bad
I'll
if
tell you what,
Alameda put in money? Like
let me say, okay, so
No,
maybe
I mean it's not like we knew what
I
they were
I
doing.
just think it
when
was
we-
funny.
when we
I
did
just
that,
think
right?
it's funny. I'm not. Yeah, it's only $1 million.
Well,
you
Brad,
raised
like,
you raised
this is
200
private
million.
markets,
So
Brad.
obviously it's only 0.5% of the raise. It's not a big deal. It's not like you got stolen money from FTX customers to run your
No.
company. You probably gave the money back. Like it's such a small amount of money. You're not going to be caught up in clawbacks that's going to suffer your company or anything.
And I want to, and Brad, I also want to give
But hold on,
credit
Brad,
to the.
Can I
Go ahead,
the
bro.
Super Bowl thing, the Super Bowl thing, because like the crypto space has a lot of PTSD, so they bring up the parallels between the two. We're giving away a free NFT. We're not asking you to sign up for a crypto trading platform. Okay, like literally, that's it. It's just a free NFT. It's not even anything close.
Sure,
to the same,
sure.
Right? We're not charging anything. We're not even asking for your email. Okay, like it's just a free.
So
NFT.
the point I
That's it.
was trying to make was that this is just the remnants of the insanity that we saw in the last year and a half, showing us that the next year we need to see more capitulation, because there's still companies like yours that have massive treasuries that are going out
Brad,
there
Brad, we're
and
not selling crypto.
But what's him? But Brad,
We're
what
not
would be?
selling crypto.
I have a more direct question. Gabriel. Yeah, go ahead. I'll let you respond, Gabriel, and then I'll add. Yeah, go ahead, and then I'll add a question after Gabriel's. Brad, about the utilities that were discussed. No, we're talking about real world utilities, about getting users to adopt those platforms. You have to. You can maybe address. I don't know. Like you can't say there's no value in everything we've
I
discussed
didn't say
just up
that.
to now.
I didn't say there was no
No,
value.
he's not saying that. He's not saying that. He's talking about the bubble of last year, which
he's
is definitely
criticizing
real.
venture and
Yeah, he's
capital
criticizing venture.
flow.
But let me, Brad, I raised $1 billion at Machine Zone. Okay, making mobile games, doing. We had 3 #1 top grossing games in a row worldwide with Game of War, Mobile Strike, Final Fantasy. We did the team that we have is very, very good and very experienced. It's not like we just rolled out of bed and just raised.
Yeah,
money.
I know,
We're
and
making
dude,
mobile
I know you're experienced.
But we're making mobile games again, right? So it's once again, it's like, and I've been very, very clear. We're making hybrid free to play games with NFTs.
Sure, but
so it's
the
like
whole Web3.
So it's not the same as like
Web3 gaming,
raising hundreds of millions, of dollars for a DeFi platform.
It is kind of the same thing, because you're building up this foundation of kind of bad logic that's going to most likely
Okay,
get a lot
but
of
Brad,
people.
Brad, let me give you a.
Brad, what's the bad logic? Tell me what the bad. So free NFTs are bad logic. How?
Oh well, how do you make money? Obviously, you're going to have to make money on this somehow.
How did I make $1.5 billion every
Yeah,
year off free games?
exploiting people's dopamine addiction centers, getting them hooked
No,
onto.
Brad, hold on.
What are you
Hold
kidding
on,
me?
hold on.
Like,
This is
Let
some
me-
of the
can I
worst
approach
takes
this
I've
from a
heard in a
different-
very long time.
are you?
Can I approach this from like a benevolent standpoint of like, I'm a middle of the road artist that leveraged this technology to hopefully create a better world for creators, and A16Z and Paradigm are both investors of mine, and there is no way that we could have built the technology we did without the money that we raised, because it's quite expensive and difficult. And a lot of this technology does quite literally seek to make the world a better place. It is not just a Ponzi scheme. Like, I spend every morning waking up thinking about what small creators need to succeed. And I could not do that if not for, backing.
Dude.
And if not for John Laterre, who's in the audience.
Come
who
on,
actually
dude.
purchased one of
You
my
made your
NFTs
money
long
at the very
ago.
beginning of this bubble where people are buying your NFTs
Dude,
for like
Brad,
800
I made my
grand.
money long before any NFT shit. To be completely
You
honest
benefited
with you.
greatly from the nonsense bubble
Well,
that
Brad,
happened, though, man. Like,
I have Brad. I'll go. You came in hotter than I expected today. I'll go back to NFTs as an asset. Do you have concerns with the utilities that were being discussed?
I think that, like, if you look at some of the thread I posted at the top, this is just a long thread of showing that there's no product market fit for normies that want to play, like gamers and regular people outside of bubble logic people that are trying to just get rich quick off the NFT bubble.
So I've got a question for you, Brad. This is where we actually genuinely disagree. So it's perfect because you can shit on me too. So if we look at in-game assets, I'm going to give a very simple example, one that I love to give. It's too early for it, but this is like the goal. Having an asset that you own within a game, and you can move it from one game to another as interoperability becomes more practical technologically. Is that a utility that doesn't make sense for a gamer? I'm not sure if you're a gamer yourself.
Yeah, actually, I also got my start in the social gaming space. I was right there when Facebook opened up the API, and I was on the Facebook developer forums with a lot of the early indie game devs building like the very first iteration of social games, and I saw the whole thing build out, and I was like an economist for a virtual game that had 1 million players. I didn't know what the hell I was doing. I hyperinflated my economy. I made money off of exploiting people's dopamine and getting addicted to buying stupid virtual farm shit. Like, I didn't realize what the hell I was doing at the time. And I think a lot of my friends from the social gaming days, eventually we kind of like recognized that way this is not completely ethical to be trying to make as much money as you possibly can from people buying virtual stuff that doesn't have any real value. And
but people, if people enjoy the game, isn't that their utility?
yeah, I mean, look, I'm not going to say that this is a
So Brad, you're
scam
saying
to
don't
be an
sell people
entrepreneur.
shit they want to buy.
No, look,
Is
I'm
that
saying
what you're saying?
I'm
Don't sell people shit that they want to buy.
What I'm saying is that a lot of my early early game developer connections from back in those days, I had these conversations with them over the last year and a half. I'm like, what do you think about Web3 gaming? What do you think about blockchain gaming? Would you get into this? And a lot of us kind of came to the conclusion, not only do the gamers not want it, like the regular people, they don't want it. People don't want to be targeted by dopamine exploiting algorithms to now gamble.
Is that
because
not
this
the
is
world? Is that not TikTok? Is that not like
how are you making the
everything,
world
Brad?
better if you're just combining with Wall Street
Do you
and
think every digital product that exploits dopamine
you're
is
linking
bad?
up with
Because
you're
like
linking up with Wall Street
what's
and
happening right now.
Silicon Valley and adding in casino mechanics and pretending that you're doing something good for the world. That's what I don't like about all this.
No, the casino mechanics are actually going out the window slowly. So play to earn games, I agree. Those tokenomics, those token economies were gambling, were Ponzi's. In fact, it seems like you have a problem with the entire DeFi 2016, 2017, which I do as well. At least now we're adding humanity and
He
some
doesn't
forms
like
of utility.
dopamine exploitation, which is quite literally capitalism. Like,
Let's try it, Brad. Go ahead.
I never said I was saving the world either, by the way. I just said I was making video games like that's it. And people like buying stuff in games. They do it all the time in all kinds of games. And I think it's better if they're NFTs. That's it.
So, Brad, first, I want to just first respect, like, we got like 20 against 1. Usually we balance out panels 50-50. But I want to go to, like, how's this for you? We need like 30 versus 1 when you come. But how's this for utility? So I've had a whole space with Luca once, going through the whole strategy at Pudgy Penguins. Luca, if you don't mind, of course, can you give us like a 2-minute overview of your strategy in bringing utility to your NFT holders, and then would love to get Brad's take on it. And Brad, be objective. So if you like it, it's okay to say you like it, and other Bitcoin maxis might agree with you, because I've had 2 maxis agree with it. One you hate, one you like. Agree with some of the utilities we've discussed in previous spaces. But let's try the IP side of utility, if you don't mind, Luca.
Yeah, Brad, I have a question from a collector standpoint. Like, would you agree that owning a digital collectible is probably better than owning a physical collectible, figuring of all of the pros of it being an NFT versus it being a physical item? I.e., if I were to own, let's say, a Picasso, for example, right, or a Pokemon card, but let's use Picasso, the friction of buying and selling that Picasso, the shipping, the insurance, the pain in the neck that is, the inauthenticity issues, verifying that it's a real Picasso, versus me going and buying a Fidenza on the blockchain that's immutably authentic and I can buy and sell in real time. Like, does that make sense to you? Like, do you agree with, just from a collector's perspective that, like, okay, at its core, that's just a better mechanism and a better use case for collecting?
Okay, so I hold a bit of a nuanced view on this compared to most Bitcoiners, because like I said, I got started in the gaming business, and I do get the mindset of somebody who has put themselves into the universe where their money is digital. They have the Bitcoin wallet, they save in Bitcoin, they're ascribing value to something digital that only exists in the digital world. So as this world continues to move towards more digital value, it would make sense that you would have a digital collectible that you would want to, say, like, keep your ticket stub as a memory that you went to this special show, and it has provenance rights or whatever. Like, I could get myself into that point where you would want to have a digital collectible or digital art or something like that. I think that there's no putting NFTs back in the box. Obviously, people are investing $200 million into, like, a company like Gabe's to try to make gaming go from free to play to free to earn or whatever, and use it as, like, kind of like a marketing thing for Ethereum. I do think you can't really stop that. What I think is going to happen is that the significant majority of the NFTs, there's probably going to be trillions of NFTs by the time this bubble completely is exhausted, and they're going to be worth nothing. They're going to have the same value as owning like a cornfield in Farmville. Like, they're gonna be
I
worth
think
nothing.
we all agree on that. I think a lot of us agree on that.
Yeah, I think there's going to be trillions of NFTs, and that's why did I buy a Super Bowl? Because I agree. I think there's going to be trillions of NFTs. I think everybody's going to start giving them out for free, and in order for my company to have any kind of, like, positioning in that, like, we have to lead that, because everybody's going to do it. I'd rather be the first to do it than the last.
But like Blau said, like,
And
earlier,
Brad,
you were saying,
just-
like, Ethereum this, Ethereum that. Like Blau said, it's true. Like, there was like 1 million people maybe at the top using NFTs on the Ethereum blockchain last year, and it was like $500
just
gas
over
prices.
2 million. If you abstract away from the value prop, and you understand that it's a method of communication and connectivity that's never existed before in the history of humanity, right? Think about the fact that trillions of people will have NFTs that I can force push metadata, communications, updates, giveaways, collection opportunities.
But communications is so important, because as a creator today, I have all these people that have heard my music, and Spotify controls a billion people's worth of data that I can't access. I mean, there's just so much. That's like one aspect of the value. There's so much more.
See, the big feature that you're all referring to, though, the ability to create value in real time with liquidity, is the exact thing that people want, but it's also the elephant in the room that leads to all the exploitative behavior.
Yes.
Because the exploitative behavior is all when a bad actor comes along, says a bunch of shit that's not true, no disclosure, a bunch of people come along and invest in that thing. It all turns out to be one pile of shit.
But Simon, that's why I'm so for regulation. We like regulation, real people who understand.
Yeah, and so, but that's the same, because what the problem with the whole NFT thing is, when does an NFT, what is that barrier between a regulated financial instrument and an NFT? And anything that you achieve by the good actors is going to be something that regulate. For example, it was like in the ICO boom. If it continued the way it did, every single public company would eventually end up delisting from a stock market, saying, why the hell am I doing all this transparency and regulations when I could just be launching an ICO instead? And so it started to go in that direction until regulators started to step in. People were creating private equity funds and saying, hey, screw it, let's just launch a token. And it just keeps moving in that direction. So the big fear is that it's not going to move into this self-regulated industry. It's just going to be regulated away until it becomes a financial instrument.
So
and all of what I'm hearing is, let's just repeat the exact same thing again.
Well,
and that's what we've done in every cycle of Bitcoin. We've just repeated the same
the
thing
politicians,
again.
though, I was with Patrick McHenry and a couple of other politicians about a month ago at Brad. Don't yell at me, Brad. At the A16Z Founder Summit, and they had amazing. I mean, the former commissioner of the CFTC was there. I mean, every regulator knows the importance of this technology to progress of the U.S. economy. It's not so likely they're just going to shut it all down. It's more likely that the guardrails are going to be clearer in the next 18 months is the anticipation of these politicians.
But them getting clearer is just literally, as soon as every bad actor manipulates it, it will just become exactly
no.
what
But here's an example of something that's clear, like real quick, and then Josh, I know you wanted to say something, so I'll make this real quick. Like Reg CF going from 1 million to 5 million is actually pretty significant. Like if a creator wants to raise money to make creations, for that to be a security, it's pretty cost prohibitive.
But
most people think
filing a Reg CF is not.
also
you can't do that
expensive.
on an NFT. It's a really crazy
And
process.
NFTs are not a super important technology that I reject. Like, you can do all this stuff with just digital signatures and public-private key pairs, and Bitcoiners are building this out in a way that you don't have to attach tokens and NFT.
Wait, Brad, hold on. You literally just said NFTs themselves are not important, but then you said they're digital signatures and unique IDs.
I'm saying,
and
look,
that's what NFTs
dude,
are.
I'm saying
you're just saying NFTs on ETH.
No, I'm saying that you do not need a non-fungible token to do something. You know this. You're building like a music licensing platform. You can just have.
No, it could just be tokens.
It doesn't have to be a token at all. You can just have
well, there are benefits to things being tokens, and we can go. That's a
it's
whole
not
other
really when you're building it inside of a centralized system where you have to get paychecks from people, and like you can just issue someone's ownership.
I could map the future. I think, Brad, you're right today. Brad, you're right in this moment of time. I think there's a future world that everybody wants to see exist, that they're building for, that requires different parts of the vertical and different parts of the stack to gradually become more decentralizized, but to comply with regulations. Some of it
I don't think you understand what I'm saying.
Centralized today.
I don't think maybe I'm probably not saying it clearly. I'm just saying, what I'm saying is all these use cases that you guys are trying to say that NFT technology is solving for, and it's never been able to be done before and all this stuff. It's not really true, because you can do this with just having a public-private key pair, like a wallet, whether it's a Bitcoin wallet or even a MetaMask wallet or whatever. You don't need to have this like financialized NFT tokenized.
What's
narrative.
the method of communication?
Brad,
what's the method of communication?
Go ahead, Josh. Let me address one thing with you. So one of the things that I think is really important is that we decouple NFTs from speculation. Right now, the primary value driver in NFTs is speculation on the asset. Future appreciation, you're hoping to flip, you're hoping to invest. In the future, and I've talked with like a lot of people, like sports team owners and things like that, you're going to see the value is probably more tied to real life things. So you might get a concert ticket, or you might get a ticket to a sports event, and you get that as an NFT, and it becomes somewhat of a souvenir. But the value driver The price of the ticket is just going to be the price of the ticket, but the value is for the football stadium or the concert that you don't have phantom fans, because what happens a lot now is person A buys a ticket, they sell it or give it to person B, and you don't really know who's in your stadium. So you eliminate the idea of phantom fans, and then kind of like Blau said, you can understand who's listening to your music, and you can then send them information. So I think right now we're in a speculative phase, and I think that the value proposition is a bit askew. I think that people are missing the main value drivers for NFTs are a way to curate and solidify your brand and the people who care about your brand, and to then give them direct data and to take data back from them, and then to market for your brand as well. So like the reason I like what Gabe is doing is Gabe is winding this into a greater business model. I think in like a 5+ year timeline, if your only business model as an NFT creator is simply capital extraction from speculators, that's like a short-sighted play. But I think that when you tie in the technology that allows for fairly seamless information to go back and forth, that's where the value proposition comes in the long run, and you get beyond the speculation. Brad, I hear what you're saying. Maybe you could do this in a public-private network. There are other ways in which you might be able to do it, but I think that this technology is primed in the best way for mass adoption, because you don't have the VC money going into these like one-off ways of doing it. You have a lot of attention, and for the first time, you're seeing cryptocurrency being used as the settlement layer for a transaction, meaning that like you buy NFTs in ETH. And I know that like condos in Manhattan have been sold in Bitcoin, but the denomination is always, it's like $16 million. But the denomination level being in Ethereum makes people recalibrate how they think about things. And that starts to become a use case for cryptocurrency. So I do think that the technology and the psychological innovation with this will transform how we see the space. Even if it's not the only way that it could happen, I think it's the most likely way.
Also,
Hey
just
guys,
a quick point on the
if we
VC
can,
money.
wow, just for 1 second, please. If we can just, for the benefit of, I'm getting a lot of messages from people asking just to keep it more absorbable for the average person, which I think we can easily relay these things. So private public keys, we can have those conversations, but these concepts are really easy to explain in a absorbable way, and I would love if we could keep it in that way so that we can keep the attention of the audience while we do this.
Something absorbable, something very absorbable, and very quick point about VC money, because I know that was the first thing Brad said was, I understand the sentiments of being anti-VC. What I will say, having gone through this in the past 2 years, there is literally zero way that you can bootstrap something that requires intense compliance work and legal work that costs millions of dollars. So if you want to go against the grain and you want to make sure you're doing it the right way, VC money is almost essential in some cases, especially in the case of what we do at Royal. Our legal bills are just too extreme, and I would not pay out of pocket to build that business myself.
Well, I'm not
So for what it's worth,
anti-VC. I obviously am not anti-capitalist. I'm not anti-VC. I'm anti-fraud, grifting, scamming, crypto bubble nonsense that we saw over the last couple of years. And a lot of the people that are
We all are, but fraud is fraud is fraud is
We
fraud.
all are.
Like,
okay, no,
to separate it.
fraudulent markets are different than fraud. Like the majority of what's happening still in crypto is fraudulent markets. It's
unregulated markets.
But would you?
breed
So
fraud.
Brad, I have another question for you, Brad, and I think the audience would relate with this one. If we look, and by the way, I invited the friend the Bitcoin Max you recommended. I just sent him a DM, just FYI. But Brad, the question to you is, if you look at the NFT communities, let's look at the PFP NFTs. If you look at the community now, we saw FTX implode. Now, even I'm surprised. We saw FTX implode. We saw 3 Hours Capital, Alameda, Luna, etc. And the market is pretty shit, and we're seeing FUD around various exchanges, and a lot of these people in the NFT space, I don't know if we can say most of them, but fuck it, I'll say most of them are new to the industry. And then you look at the ecosystem, you look at the communities, they're still relatively vibrant. A lot of these NFTs have managed to hold their value. Don't you think they've earned their place? They've only existed for 6 years, 5-6 years or so. Haven't they earned their place as a useful technology with a community ready to build, despite the markets being in the gutters? Like we're not in the days of 10x, 20x, 100x are gone, and they've been gone for over a year.
So I just pinned a tweet. I have a good friend, Jason Williams, going parabolic on Twitter. He's total degen NFT, also Bitcoin maxi.
You know, Jason bought an NFT from me for 15,000 Doge. Once upon a time.
15,000 Doge? How did that happen?
Or no, sorry, 500,000 Doge. But at the time,
I was about to say $4.
It was 15,000 USD at the time. But I think at the time it was
And he did it in
500,000 Doge.
Dogecoin.
I love
Jason
Jason's
too. All
fun.
right, but like, look, Jason's telling me the same thing that Mario's telling me here, and I don't think that people remember the last cycle. I went on to. I'm not a chartist like Chris. I just went on to TradingView and I looked at what the history of what happened in the last cycle and charted us, because it's pretty much playing out nearly exactly, just at a much bigger level. We have a lot of pain to go. Like last cycle, there was about 1 year where
Brad,
people didn't realize
you're
the
not gonna-
bull market was done, and like Facebook banned YouTube, Twitter, Instagram, all these companies banned crypto advertising and ICO advertising in January 2018. And there was so much momentum, and like the FOMO was unreal, and companies were changing their name from Long Island Iced Tea to Long Island Blockchain. And all this shit was happening, and it took like 8 months for people to realize this was a bear market and this shit was all unregulated securities and it was just a bubble and it was nonsense. And then about another 3 months for people to kind of like get into the new year. There were tax loss harvesting, selling stuff. We thought things were fine. And then,
but we didn't, but we didn't have FTX, man. We didn't have Alameda. We didn't have 3 Hours Capital. I think we had more Black Swan events now to kind of say, hey, punch in the face. We're in a bear market.
You're missing, you're missing the point. The point is like it took us the exact amount of time this cycle as it did last cycle for people that were in the degen pits flipping safts at 50% discount because they missed the the Telegram ICO because it was exclusive. So now, like a year into the bear market, funds are losing money, going bankrupt because the SEC suing all the big ICOs, the early ICOs. So everybody's starting to panic. Funds start to go down. Ethereum's crashing. So then all these people that raise their treasuries with Ethereum start selling. Adds to the sell pressure of the tokens and Ethereum. And now you got all these guys that are still buying SAFs at like a 70% discount. They're like, oh my God, this Telegram ICO that I couldn't get into before, it was so exclusive, it was such a good brand, is now so cheap, I'm going to buy it. And what ends up happening, the SEC shuts down the whole thing and everybody got wrecked that bought that. And the next year was capitulation. Like it took until a year in, so a year from where we are right now, basically December 2023, I think is when the final capitulation and NFTs and stuff's going to happen. And that's, Mario, when you're finally going to take that profile picture off so we can see your handsome salsa face.
Bro, we have a battle. So I'm gonna end the space, everyone. So we're gonna have like a final 30 to 60 second conclusion for the audience from every panelist and audience members. I want you to put in the comments, bottom right corner, what your thoughts are after this debate. I want to go through it after because I have another space in 7 minutes.
And Mario,
unrelated to crypto. But before Fidget,
Justin,
what else?
can we have you say one thing?
I know. I brought him up.
Yeah,
I get credit. He was requesting. I get credit. So I get credit. Now, but so first, Brad, I will win, man. You will have an NFT PFP on your Twitter before I remove. Actually, no. You might win because my space is non-crypto related, and having politicians and Elon and these guys on my space and them seeing me with a PFP of an NFT doesn't help my case. But I've resisted.
Man, you look like it looks
Brad,
ridiculous.
Stop
outside
it.
of crypto.
Seriously. Well, you look like Robin Hood. You look like Robin Hood. Don't argue with me about looking ridiculous. But guys, let's end it for the audience, for every panelist. For the audience, last message. Try to keep it within 60 seconds because I do have a space in 6 minutes. We'll kick it off with Gabriel, then Justin. 60 seconds, man. First, thank you so much for joining and all the panelists for joining on such short notice. But what would be your message for the audience, especially considering market conditions? And the audience is some people are in crypto and some people hate crypto. They're like, hey, I want to learn more.
Yeah, NFTs are not crypto. They're just digital items. And they're about to be absolutely everywhere because they're cheap to make. And every company is going to use them for community marketing, various purposes, especially this year. So we're about to see an explosion in free NFTs. They're going to go absolutely everywhere, and especially in games. And and watch out for what we do on the Super Bowl, because that's what we're doing there, is giving out 10,000 NFTs live.
Oh shit, I didn't know. I was wondering why Brad mentioned Super Bowl. Holy shit, good for you. And giving away free NFTs on Super Bowl. Even though I don't usually like Super Bowl ads, I think it's a pretty smart strategy. But do
We're
you
the
think it's
first
too
people to
early?
do it.
Yeah, but do you
No,
think
no,
it's
no.
too
We're not
early? Do you think
No,
the
you have
mass
to like
market?
people have to learn what they are and like miss it first. Like giving them, they have to want one, so they have to actually like
Fair.
realize that they
Gabe's
missed
also
it.
done Super Bowl ads before. This isn't
Yeah,
his first
this
rodeo.
will be my third.
Gabe, is that a 30-second? So 5 mil,
Yeah,
6 million this year? What is it?
It's we're spending roughly around 7 million total on the ad. 30 seconds, yeah.
Jesus. All right, cool. Blau, you said you were the first to do it. Who said was first to do it? Someone jumped in and said we're the first to do it. Was that you, Gabriel, or someone else said it?
No, I was saying there's been some NFT giveaways on television before, like really minor ones last summer, but nobody's ever done anything like this. This is the next level. Very hard to do technically.
I just said that it wasn't Gabe's first rodeo because I.
Oh, okay, yeah. I heard that one. All right, Blau. So yeah, I'll let you give us a second message before Justin. Justin
30-second. The
Fredericks.
30-second. My very quick message is, the second prices go up does not mean it's a bull market. Brad, we totally agree there. I think who knows where prices can go. I've seen it all, and the reality is, I think the one thing that's different this time is that crypto is more correlated to regular markets than it's ever been. And as things happen in tech and small cap growth with rates, I think that we'll see crypto more correlated to regular markets than ever before. So choose wisely.
Brad, do you think Blau would remove his NFT PFP?
He doesn't even have an official one. He's already hedged his bets there.
What do you mean? This is a CryptoPunk. I just changed the background.
Oh, I don't know. Don't you have to have a hexagon for it to be official?
Yeah, why Blau? A lot of people don't do the hexagon. Why? A lot of people don't do it.
My ledger to Twitter. I don't do that.
Oh yeah, so you
Yeah,
got good OPSEC. Okay, that makes sense.
Yeah, I don't. I'm an idiot there. Yeah, so we'll go to Fredericks, Justin Fredericks. What's your message to the audience? Keep it within a minute.
Yeah, no, listen, I've been listening to this conversation for some time. I think, what I'm reminded of is that we need to do a much better job of communicating to each other rather than against each other. I actually think this space fosters more of that in a better way than others. And so in a very non-technical way, here's how I'll put it. And I think both sides of this conversation could potentially embrace it. Like, I view NFTs for most part as providing just more efficient ways of transacting in markets that have very healthy secondary markets, right? So you look at industries that have healthy secondary markets, NFTs can be a vehicle that's much more efficient than traditional. And sometimes that's, sexier industries like collectibles and art, and sometimes it's very non-sexy like real estate deeds and car titles, which will come down the line. The issue with the product market fit, though, is that I agree, most of the NFT collections today do not have product market fit, primarily because there aren't a substantial percentage of people who want the primary market assets beyond secondary market speculative value. So sneaker markets with StockX and GOAT, you have a substantial amount of people who want the Jordan 1s, who want the SB Dunks for it itself. And that creates a market for both flippers and core holders. And same with trading cards, et cetera, houses, of course. And as we get a larger percentage of those people who want the primary asset for what it is, then that allows for both the speculative market and a healthier overall market.
All right, thanks a lot, man. Chris, I wanted to do a discussion on Solana. I'm a big fan of Solana. When it was crashing, I tweeted in support and got a lot of hate. Maybe within your 60-second overview, and sorry we couldn't get to Solana, but I'd love you to give us your overview on Solana and what you think about the ecosystem. You did a great job in the last space in which we discussed it when it was crashing after FTX imploded. So what's your take now, and how's the ecosystem?
Thriving, and obviously it's an oversold asset around a whole bunch of capitulation events. A rebound to $14 or $15, that was pretty expected. To see it go back to $24 is just one of those things crypto does every once in a while, where it makes everybody regret their bad decisions. Doesn't mean you're clear. I love that everyone keeps using the word composability, because that is Solana's strength. It is the most composable layer 1 solution. And that has a lot to do with the Rust programming language, making smart contracts actually efficient and interoperable. We can now scale ERC contracts, and we can interpret Python and all kinds of shit, trying to be more like our big brother Bitcoin. At the end of the day, Bitcoin is king, and that is the only place that I fucking hedge my bet forever. But I'm Solana Chris, because the utility that we build on Solana is next to none. I sat here for an hour and listened to guys talk about gaming utility they hope to build in the future. that I literally have frameworks for and am implementing this month, I find it amazing. And I am fucking pressed to say Solana may very well be the best performing asset in the upcoming bull run outside of Bitcoin. And you know what, Brad? Dude, they're gonna shit their pants when Bitcoin's 200K in 2025, dude. Like, it's just like, this is all stereotypical. You're coming out of a bottom into a disbelief rally, into a pullback that's going to be a bear trap leading up a year into the fucking next halvening. You put fear and doubt in everyone's heart. You play out one daily close somewhere in 2024 back above 44K. And the next thing you know, your mother and your brother is telling you Bitcoin's going to $1 million. Like, guys, I think you survived the worst of it.
All right, bro. It was a great summary, man. I see Solana just pumped 20% while you're speaking, so you must have shielded it well. Luca, good to have you again. One of the spaces we did together is one of my favorites. So would love your 60-second overview, because I'm late for the next space. Your 60-second overview about the space and for anyone wanting to get involved and anyone still involved in the community.
Yeah, I just want to give everyone on this panel their flowers. I think this was a super refreshing conversation. Brad, your contrarian point of view was actually something that I think we need more of in the space. I will say, though, I think the space is yet to evolve today. It's about what it's going to look like tomorrow. And so it's up to us to be visionaries and to shape what we believe the future is going to look like. And I believe a lot of those people are on this stage today. So thank you for the time. And that's my 60 seconds.
Cool, man. That was very quick. I really appreciate it. We go to Justin, Justin Waldron. Appreciate you being here, man. I think it's not your first time here. I think you've been here before. Appreciate you being back. What's your message to the audience, people within the space and outside the space?
Yeah, man. Thanks for having me. Look, I think like what we're really talking about when we talk about things that have value to people they're largely in these two categories, right? It's products and services. Those are the things you can create or do for other people that they find valuable. And if you look at what the internet's been for the last 3 decades, everything is a service. And when you listen to Spotify, we tend to call these things products, but they're not products. Products are things that you buy and you keep. And services are things that you use. And every single product that you currently use on your phone, every app is actually a service. And freemium games are a service where you play and you get value out of playing and you buy virtual goods. But what you're actually doing is not receiving a product. You are receiving the right to play the game and use that item. And the fundamental thing here is like, when we think about, do NFTs have value or not? Well, are products valuable? Because they weren't possible to create on the internet until NFTs came around. And now you can create things that people can buy and they can keep. And if the argument is that those aren't valuable, well, then the mediums of exchange like Bitcoin and Ethereum, well, they suddenly aren't valuable either, because really, like, imagine a world where products and services aren't valued by people. There's no more use for a dollar. And so I think the thing that really like unites us here is look, you can be maximalist about like the currency side, but you have to be a fan of the ability for people to create products on the internet, because it means that we'll need a way to exchange the value. And that's where Bitcoin and that's where Ethereum come in. And so look, like this is something that was not possible before. And we've used these words so interchangeably for so long that we've forgotten what they mean on the internet. But you got to remember, everything you do right now, you're using a service, you're using Spotify, and you're getting the rights to listen to the song. You're not buying a product that you get to keep. And that's the fundamental difference. And that's what's like going to drive this whole thing forward, is now people can create products on the internet.
Brad, and then we'll go Umbrella and Josh. What's your final word to the audience? I think Justin, I like Justin's summary the most so far.
Yeah, I would say that, like, you know, this is just a year into the bear market. There's still a lot of things to fall apart. There's still a lot of SEC, DOJ actions to happen. So I would caution people to be getting involved in NFT investing. It's kind of frustrating for Bitcoiners, because it's one of the things is that this is just a major distraction from the real mission here, which is to promote sound money and saving in Bitcoin and helping people protect themselves from what's happening in the world. And as privileged Westerners, we kind of get caught up in these insane bubbles like trading Pokemon cards or op skins, CS:GO gun skins or NFTs or shoes or whatever. But if you go on Google Trends, just to close it up, I'd ask everybody to just think about this. Go on Google Trends, go to a country that does not have the privilege of a currency that we have in the Western world, like Canada and the United States, that's not hyperinflating or doesn't have massive capital controls. Like look in Nigeria, there's 200 million Nigerians that are currently facing $100 a week withdrawals from their bank accounts, and they have to trade in all of their money, all their cash. They have to take it back into the central bank because they're going to make it no longer legal tender. So they're trapping 200 million citizens inside of this CBDC hellscape, and they need Bitcoin. So you go to a country where they're actually experiencing the real problems that why Satoshi Nakamoto invented Bitcoin in the first place. You look at what they're searching for, put Bitcoin, put NFTs, put crypto. They don't have the monetary privilege to be able to go and speculate and gamble on JPEGs and dog coins. Like they're looking for Bitcoin. So that's kind of like where a lot of us Bitcoiners focus. I'm invested in like 30 different Bitcoin startups, a bunch of them in different places in the world. And like I'm a VC, I guess. So it's not like I'm against capitalism or VC. It's just I prefer that we fix the money. Like that's the biggest problem.
I agree. That used to be the buzzword of, or all the focus on was on this in 2017, 2018. It seems we forgot about it. So yeah, we've discussed this in previous spaces. We did it like as an ode to Bitcoin as the biggest use case, and I think the most important use case of crypto was still Bitcoin being a store of value. So yes, I agree with you 100% there, and I do want to make a bet, Brad, to end the space. What would it take for you to at least buy a CryptoPunk and use it as a PFP for one day?
I had 4 CryptoPunks in 2020. So I mean, I'm also a FOMO sapien.
What happened to them? What happened?
I sold them. They're worth more than what I bought, so I sold them because like there's a bubble. So like I'm Robin Hood because I like to extract value from obvious bubbles and then go and deploy it to the people building problems over the world.
How'd that work for you? How'd that work for you? How's the price
Brad,
now?
It worked.
Brad,
it worked
question.
all right. It worked all right, but I don't recommend anybody do it because it's
my bet is not when you'd buy it. When you'd buy it and put it as a PFP on Twitter for one day,
Oh
what
man,
would it take for
I
you to
would
do
never do it. I just it doesn't make it
for one day?
It doesn't make sense to me. I would.
Even if is there any milestone the industry or the NFT PFPs need to hit for you to be like, all right, I'm going to put it as a PFP for one day as a sign of respect?
It'd be really hard for me to see that there's real value there, man. Like maybe in 10 years or something we can talk about it to see what happens in 10 years.
All right, I'm going to come up with something we can make the bet offline and announce it in a future space because I'm sure there's something
because
that'd
that's
be
a
like, all right,
signal.
now I'm
like
impressed.
Doing that is a signal to everybody, saying that this isn't something you endorse and that this is cool and you should also put your savings into this nonsense. So like I don't want to lead people down that path,
Respect. Let's see. I'll think of something. Umbrella and Josh, final quick words because I'm late for the next space. Final quick words, guys. Umbrella, appreciate being here, man. Usually you do a lot on the space, and we started getting into NFTs. We weren't expecting this.
Yeah, I haven't spoken as much today. I guess for me, it's more going back to kind of the Web3 gaming. I guess there's a kind of running joke in the kind of crypto community, especially on CET, is there's no real Web3 games, maybe Gods Unchained, that are actually playable at the moment. That we do our kind of our crypto thing, and then we log onto our PS5 or Xbox and play Elden Ring. And Brad probably can relate to this. Is there's no playable Web3 games that kind of is getting mass adoption, and I think there's are the collectible side of it, but will we see kind of Web3 gaming and actual on-chain gaming getting the mass adoption kind of side of it, and kind of that's probably the side that excites me the most. Obviously we'll see it in kind of trading cards and collectibles and that side of it, but will we see kind of big gaming houses start developing proper blockchain games, and that's probably kind of what Gabe's looking at.
Josh?
So really quick, ownership and currency are historically throughout the history of the world tied together. The strength of a currency in any given country is almost directly correlated to the private ownership of real estate and the ability to make capital improvements on this. The only reason I mention this is because the next wave of cryptocurrency is going to allow digital ownership, and ownership and currency, again, are symbiotic to one another. So the ability to own digital goods will inherently make cryptocurrency more valuable because it creates an additional use case that didn't exist like 7 or 8 years ago, or at least didn't exist at scale. So it's an important thing to historically look at how currencies have operated with land ownership and private ownership, and then think about that for cryptocurrency and NFTs.
Fiji.
Click on my profile. Click on my profile. I just made your dreams come true.
What'd you do?
I changed my name to Brad Mills.
Oh shit! Okay, cool. I'm screenshotting this, and I'm gonna create a whole story, a whole rumor about it, and then spread it. Crypto Twitter loves rumors, and they go viral pretty quickly.
I'll change my profile pic to yours to make it fair.
I'll say, all right, cool. I'll wait for that and screenshot that, and I'll come up with a thread. Let me come up with a good story. Get your approval, guys. Simon, while I wait for Brad's profile pic to change, a quick 30 to 60-second summary for the audience. You know, we've been doing these spaces for a really long time. So what would you say to everyone considering market conditions? And it doesn't have to be about the NFT ecosystem.
Yeah, I mean, the one thing I would say on the NFT side is that for the last decade, I've seen illiquid early stage projects with secondary markets bring out the real worst in human behavior. And so if you can genuinely separate the technology from the liquidity and real-time pricing of an early stage project with no traction, then you may have a shot at surviving a regulatory crackdown. But I don't think you'll be able to draw that separation between one's desire to make money and the horrible behavior that can come out when you have these liquid markets or early stage projects. So that's what I'd say. And on the one thing that I think we should be covering in a future space as well. I pinned a little a YouTube video I created. If anyone's involved in any of these Chapter 11 cases, whether it's FTX, Genesis, Celsius, Voyager, Gemini, whichever ones are coming up next, I finally reached a conclusion that there is one bigger scam than the Ponzi scheme of the US dollar, and it is actually Chapter 11 protection. It's one of the most scammiest processes the world has ever invented, where essentially the people that get scammed by these companies have to pay the bills for all of the professionals and lawyers that figure out how to protect the companies and use the process in order to make client money and do what SBF does legally through the US bankruptcy court. So I covered a video where it's all tied together. So there's lots that we've learned from all of these. So if you're involved in any of those cases, make sure you get involved. You're going to have to fight for your money because Chapter 11, it really is a nasty ass process. One of the biggest scams I've ever seen. So I'll leave it on that one.
That was pretty bleak, Simon. Usually you end it on a positive note. But for everyone who's listening.
Okay, the positive note then is that there's very deliberate actions you can take early in the case.
Simon, how's this? Actually, now moving on from Chapter 11, what would it take for you to put a CryptoPunk as a PFP?
Yeah, I haven't really. I'm still open. I'm an open-minded person. So give me a reason to do it. I haven't got one yet.
We'll do that in the next space. Me and you will come up with a reason. The day you do it is the day CryptoPunks and NFTs will pump. The day Brad Mills does it.
Gives you one, will you?
No, I'm gonna have to have a really good reason to do it. It's got to have
what do you mean? I give him one. Like it doesn't even impact his balance sheet if I give him one. Simon is invested in 80% of the crypto companies we see today. And he discloses
that's
it in
a good
every
way
space.
to get the SEC to go after Simon for being an unregistered broker.
Yeah, exactly.
I spent my whole life avoiding that, And now you turn me into an unregistered.
Don't do it,
conspiracy.
Simon.
Cheers, mate.
Guys, really appreciate it. It was a great discussion. It's good to do these crypto spaces again. I'll try to do one again soon. And I'm late for my next space. So love you all. Thank you so much. Gabriel, it's your first time on the space, I think. So it's a pleasure to have you on the space for the first time. Otherwise, thank you so much, everyone. See you on the next one. Bye.